नमस्कार अर्थमित्र हो. अर्थप्रबोधन मालिकेच्या आजच्या ह्या 94व्या सत्रात आपणा सर्व अर्थमित्रांचं मनपूर्वक स्वागत. And a warm welcome to all those Arthamitras who have joined this session through offline mode as well. आज जरा ड्युअल मोड असल्याने फिजिकल उपस्थिती कमी आहे, पण तुम्हाला नॉलेज किंवा टेकअवेज सेवा संघाच्या कार्यक्रमात नेहमीच चोख मिळतील याची मला खात्री आहे. We welcome both our speakers, guest speaker for today's session, Mr. Christy, Mathai and Mr. Nilesh, Shetty. Welcome to you, sir. They're both from Quantum Mutual Fund Group. अर्थमित्र, आरबीआयनी इंटरेस्ट रेट वाढवले की आता आपल्यापैकी ज्यांच्याकडे लोन आहे, आता समजा होम लोन असेल तर तुम्हाला एक ईमेल येतो की देर इज रिव्हिजन इन युअर इंटरेस्ट रेट. तुमचा PLR वाढलाय, त्याच्यामुळे नॅचरली तुमची जी लोन इन्स्टॉलमेंट आहे ती वाढणार किंवा तुमचा जो रिपेमेंटचा पिरियड आहे तो वाढणार. त्यामुळे आरबीआयने इंटरेस्ट रेट वाढले की बँकांचे वाढतात आणि बॉरोवर काय परिणाम होतो हे तर आपल्याला माहिती आहे, पण ह्या इंटरेस्टचा इन्व्हेस्टरवर काय परिणाम होतो हे आजच्या सेशन मध्ये आपण जाणून घेणार आहोत. आणि त्याचप्रमाणे आता Q1 of 2023 is about to end. March end आलाय आता. What exactly we have in store for us for Q2 and Q3 हे देखील आपल्याला कळणार आहे आजच्या सेशन मध्ये. आणि नेहमीप्रमाणे मार्च आहे, त्यामुळे टॅक्स सेव्हिंग कसं करायचं, त्याच्यासाठी कुठली इन्स्ट्रुमेंट्स मध्ये इन्व्हेस्ट करायची, त्याच्यासाठी फायनान्शियल इयर 22-23 हा शेवटचा महिना असल्याने त्याबाबत देखील आपण आजच्या ह्या सेशन मध्ये माहिती घेणार आहोत. त्यामुळे तुमचा अधिक वेळ न घेता, कारण आपलं सेशन थोडंसं ऑलरेडी 15 मिनिटं लेट चालू झालंय, त्यामुळे तुमचा अधिक वेळ न घेता मी आजच्या कार्यक्रमाला सुरुवात करताना प्रथेप्रमाणे अर्थप्रार्थनेची ध्वनिफीत लावण्याची श्रीयुत राहुल यांना विनंती करते. नाही हो. अर्थमित्र, ध्वनिफीत चालू होऊ शकत नाही, त्यामुळे मी स्वतःच ही अर्थप्रार्थना आपल्यासाठी म्हणणार आहे. ही अर्थप्रार्थना महाराष्ट्र सेवा संघाचे अध्यक्ष श्री चंद्रशेखर वझे सर यांनी रचलेली आहे आणि आमच्या अर्थ विभागाचं उद्देश हे सगळे प्रोग्राम्स, अर्थप्रबोधन सिरीज किंवा वर्कशॉप्स आम्ही का कंडक्ट करतो हा उद्देश सांगणारी अशी ही अर्थप्रार्थना आहे, जी मी आपल्यासाठी आता म्हणते. विघ्नेशान मुनी गुरु स्मरुनी लक्ष्मीस आवाहिले, आम्ही गुंतवणूक शास्त्र शिकण्या हे सत्र आरंभिले. केव्हा स्थावर आणि जंगम कधी, कोठे किती गुंतवू, चर्चा मंथन तज्ञ बोध मिळता, हे प्रश्नही सोडवू. हेवी भाग सुवर्ण पोस्ट अथवा रोखे तसे फंड ते, वृद्धी भांडवली मिळो कर नको, पर्यायही कोणते. कोठे उत्तम रोखता सुगमता, लाभांश वा व्याजही, कोठे गुंतविणे सुरक्षित असे, नोंदीस कैसी वही. सन्मार्गे धन संपदा मिळविणे अत्यंत आवश्यक, पैसा ध्येय नसे म्हणून जपणे जाणीव सामाजिक. ज्ञानाचा उपयोग गुंतवणुकीसाठी सदा होऊ दे, हे सारे समजावया सुमती दे आम्हास तू शारदे. वझे सरांची ही रचना. यानंतर मी महाराष्ट्र सेवा संघाचे अध्यक्ष श्रीयुत वझे सर, अर्थ विभागाचे अध्यक्ष श्रीयुत वझे साहेब, विजय वझे साहेब यांना विनंती करते की त्यांनी आजच्या दोनही तज्ञ वक्त्यांना व्यासपीठावर आमंत्रित करा. मी वसे सरांना विनंती करते की त्यांनी श्रीयुत निलेश शेट्टी यांचं पुष्पगुच्छ देऊन स्वागत करा. And I request Vijay Vazeji to kindly welcome our today's speaker, Mr. Christy Mathai. यानंतर वजे सरांना विनंती करते की त्यांनी सेवा संघातर्फे प्रास्ताविक करावं.
नमस्कार आणि सगळ्यांचं स्वागत. आमच्या महाराष्ट्र सेवा संघाच्या अर्थ विभागाचे अध्यक्ष श्री विजय वजे, आजचे आपले तज्ञ वक्ते श्रीयुत निलेश शेट्टी साहेब आणि ख्रिस्ती मथाय आणि क्वांटमचे योगेशजी देवरुखकर, तसेच आमच्या अर्थ विभागाचे सगळे कार्यकर्ते श्री तडेकर सगळेजण आले तिथे. अरे मला वाटतं टाळ्याच वाजवायला लागला की काय. असो, तर ही जरी उपस्थिती अशी असली तरी याचं एक कारण म्हणजे टेक्नॉलॉजी हा जसा एक वरदान असतं तसं काही बाबतीत त्याचं अडचण पण होत असते. कारण टेक्नॉलॉजीमुळे सगळ्यांना घरी बसून सगळं बघता येतं आणि त्याच्यामुळे मग इथे उपस्थिती कमी होते. पण महाराष्ट्र सेवा संघाची इच्छा अशी असते की नॉलेज मिळवणं हा एक प्रकार आहे, पण हे जे बंधुभाव डेव्हलप व्हायला पाहिजे सगळ्यांनी एकत्र येऊन, आणि आजच्या काळात ती खूप गरजेचं आहे. विशेषतः कोविडमुळे आपण एकमेकांपासून फार लांब जायला लागलो, परंतु सगळ्यांनी एकत्र येऊन काहीतरी ऍक्टिव्हिटी करणं आणि समोर चर्चा करून गप्पा मारून आपलं नॉलेज वाढवणं आणि एक्सपिरियन्सेस शेअर करणं हे खूप महत्वाचं असतं, जे ऑनलाईन मध्ये साध्य होत नाही. कारण ऑनलाईन मध्ये फक्त आपण आपल्या घरी बसून फक्त ऐकत असतो, पण आपल्याला दुसऱ्याशी इंटरॅक्शन किंवा गप्पा मारता येत नाही. त्याच्यामुळे मी सगळ्यांना आवाहन करतो की जरी टेक्नॉलॉजीचं आम्ही अवेलेबल असलं, सगळी ऑनलाईन अवेलेबल असलं तरी शक्यतो सगळ्यांनी कटाक्ष ठेवावा की इथे यावं, की ज्या योगे तुम्हाला खाऊ पण खायला मिळतो आणि गप्पा मारता येतात. हे खूप महत्वाचं आहे. असो, महाराष्ट्र सेवा संघ आज खूप वेगळ्या प्रकारचे वेगळ्या ठिकाणावरनं इथे श्रोते जमलेले आहेत, म्हणून फक्त मी महाराष्ट्र सेवा संघाविषयी थोडस सांगतो की महाराष्ट्र सेवा संघ ही 85 इयर ओल्ड 85 वर्ष ज्येष्ठ अशी संस्था आहे. आणि या संस्थेत तुम्हाला तुमचं जे जे मनात आवडीचे विषय त्या सगळ्या विषय इथे आहे. म्हणजे आमच्याकडे जवळजवळ 10 ते 12 विभाग आहेत आणि अबाउट 10 to 12 प्रोग्राम्स इच डिव्हिजन और एक डिपार्टमेंट कंडक्ट्स, आणि त्याच्यामुळे आमच्याकडे जवळ वर्षाला 100हून जास्त प्रोग्राम होतात. आणि त्याची जी विविधता आहे, त्याची जी रेंज आहे ती एवढी व्यापक आहे, म्हणजे एवढी त्याच्यात व्हरायटी आणि वर्सटिलिटी आहे की आमच्याकडे ड्रामा, म्युझिक, इतर लेक्चर्स, हिस्ट्री, जिओग्राफी हे सगळं आहेच, परंतु आमची एक्सलंट लायब्ररी आहे विच हॅज 40,000 प्लस बुक्स विच इज कम्प्लिटली कम्प्युटराइज, संगणकीकृत ग्रंथालय आहे, ए क्लासचं ग्रंथालय आहे. त्याच्यानंतर आमच्याकडे अर्थ विभाग आहे, याच्यातनं पण अर्थ प्रबोधन करतो. 94वा हा कार्यक्रम आहे, म्हणजे कन्सिस्टन्सी आहे, सातत्य आहे त्याच्यामध्ये. एक ऍक्टिव्हिटी सुरू केल्याने सोडून दिली असं होत नाही, वर्षानुवर्ष ती ऍक्टिव्हिटी चालू राहते. अर्थ प्रबोधनातनं आपण करतो. महाराष्ट्र टाइम्स त्याला माध्यम प्रायोजकत्व म्हणजे मीडिया पार्टनरशिप आहे. त्याच्यानंतर अर्थ आरोग्य विभाग आहे, आपण निरनिराळ्या तज्ञ डॉक्टरांना इथे बोलवून त्यांच्या मुलाखती घेतो, त्यांचे आपण हेल्थ कॅम्प्स घेतो, डायग्नोसिस करण्याचे आपण सर्व्हिसेस देतो. आपलं एक मेडिकल सेंटर आहे बॉम्बे हॉस्पिटलच्या सहकार्याने, मुलुंड पश्चिमेलाच आहे, तिथे फिजिओथेरपी सेंटर पण आहे. नॅशनल असोसिएशन फॉर ब्लाइंड नॅपच्या सहकार्याने आपण इथे अंध विद्यार्थ्यांना, दृष्टीबाधित विद्यार्थ्यांना मार्गदर्शन करतो. नंतर मैत्रेयी हा महिलांचा विभाग आहे. विज्ञान विभाग आहे, ज्याच्यामुळे यंगस्टर्स तरुण आमच्याकडे जोडलेले राहतात. नंतर इतिहास आणि याच्यावरचे तर वेगळी व्याख्यान आहेत, पण आमच्याकडे गिर्यारोहणाची वेगळी ऍक्टिव्हिटी असते. संबंध भारतात माउंटेनियर्स अँड ट्रेकर्स कॉन्फरन्स और गेट टुगेदर, इथे ओनली ऑफ इट्स काइंड इन इंडिया वी आर कंडक्टिंग इट, अँड देअर इवन माउंटेनियर्स फ्रॉम अब्रॉड ऑल्सो पार्टिसिपेट इन दॅट. त्याच्यामुळे ते एक आमचं आहे महत्वाचं. आणि सगळ्यात या सगळ्या संस्कृतमध्ये दरवर्षी नवीन नाटक लिहून आम्ही करतो. संस्कृत रसास्वाद वर्ग इथे चालतो. असे खूप खूप कार्यक्रम आहेत. तुम्हाला ज्या विषयात रुची असेल, जिथे जिथे तुम्हाला इंटरेस्ट असेल, त्या सगळेच आमच्याकडे आहे. एवढंच नाही तर सैन्य दलाच्या सहकार्याने पण आपण काही कार्यक्रम करतो इथे. आणि आपण जे पराक्रम करतात, वी रिस्पेक्ट अँड ऑनर द व्हॅलर, हे सगळ्यात महत्वाचं आहे. आणि त्याच्यामुळे सैन्य दलातले लोक आम्हाला सांगतात की युअर्स इज द ओनली सिव्हिल ऑर्गनायझेशन विच हॅज अ टाय अप विथ दी आर्म फोर्सेस. ज्याच्यामुळे आम्ही त्या आणि या सगळ्याला कन्सिस्टन्सी आहे. खूप हाय क्वालिटी कार्यक्रम असतात आणि सगळे कार्यक्रम साधारणपणे विनामूल्य असतात. ऑल आवर प्रोग्राम्स आर नॉर्मली देअर नो चार्जिंग फॉर एनी प्रोग्राम. त्याच्यामुळे नॉलेज शेअरिंग हे मुक्तपणे असतं. फक्त तुम्ही याच्याशी जोडलेले राहणं महत्वाचं आहे. तर त्याच्यामुळे आम्ही एक केलं की आम्हाला लोक विचारतात की तुमच्या एवढे ऍक्टिव्हिटीज असतात, कारण इमॅजिन करा 100 प्रोग्राम्स एव्हरी इयर, म्हणजे एव्हरी वीक वी हॅव 2 इव्हेंट्स. म्हणजे आम्हाला सगळे कळणार कसं, तर वी हॅव अ व्हेरी युनिक अँड इनोव्हेटिव्ह मेंबरशिप कॉल्ड व्हॉट्सअप मेंबरशिप, वेअर यू पे जस्ट 100 रुपीज प्लस जीएसटी, दॅट इज 120 रुपीज, आणि तुम्हाला व्हॉट्सअपवरती सगळे मेसेजेस सगळ्या प्रोग्राम्स येतील. यू कॅन शेअर दोज मेसेजेस विथ युअर अदर फ्रेंड्स अँड रिलेटिव्ह, की ज्याच्यामुळे त्यांना पण ह्या सगळ्या गोष्टींचा लाभ मिळेल. इट इज अन अपॉर्च्युनिटी फॉर यू टू डू द सोशल वर्क, कारण these बेनिफिट ऑफ ऑल these इव्हेंट्स शुड रीच मॅक्सिमम नंबर ऑफ पीपल. दॅट इज अवर इंटेन्शन. आणि त्याच्यामुळे मी मध्ये मध्ये इंग्लिश बोलते, कारण आपले हे जे तज्ज्ञ वक्ते दे आर मोर कम्फर्टेबल विथ इंग्लिश प्रोबेबली. तर मी म्हणून या सगळ्या गोष्टी जरा विस्ताराने सांगितल्या, कारण दरवेळी आमचे जे श्रोते असतात ते कमिटेड ऑडियन्स आमचा जो असतो, दे आर very well aware of all our activities, but today I am finding very many new faces. त्याच्यामुळे मी तुम्हाला आवाहन करतो की प्लीज स्टे कनेक्टेड विथ दिस ऑर्गनायझेशन. तुम्हाला याच्यातनं खूप एनरिचमेंट मिळेल. यांना मी क्वांटमचा अर्थ विचारला होता की क्वांटम म्हणजे काय, तर छोट्या गोष्टीतनं खूप मोठ्या गोष्टीशी कनेक्ट होणं. तर त्याच्यामुळे तुमच्याकडे छोटे निधी असेल तरी देखील त्याचा मोठा निधी कसा करायचा याचं मार्गदर्शन आपल्याला हे क्वांटमचे तज्ज्ञ करणार आहेत. आणि तुमचं जे छोटं विश्व असेल, छोटं कुटुंब असेल, तर ते मोठ्या कुटुंबाशी कसं जोडलं जायचं याच्यासाठी तुम्हाला महाराष्ट्र सेवा संघ आहे. त्याच्यामुळे तुम्ही महाराष्ट्र सेवा संघाशी सतत जोडलेले राहा. व्हॉट्सअप मेंबरशिप किंवा कुठल्याही माध्यमातून आपल्या कार्यालयात व्हॉट्सअप मेंबरशिपचं हे उपलब्ध आहे. कधीही जाऊन तुम्ही 120 रुपये भरून ते घेऊ शकता. मी आता जास्त विस्ताराने बोलत नाही, कारण मुळात कार्यक्रम थोडा उशिरा सुरू झालाय आणि आपल्याला या तज्ज्ञांचं मार्गदर्शन हवंय. मी पण ते ऐकायला उत्सुक आहे. तेव्हा मी माझं हे प्रास्ताविक आहे ते आवर्त घेतो. तुमच्या सगळ्यांचं पुन्हा एकदा स्वागत करतो. धन्यवाद आणि जय हिंद.
धन्यवाद वजे सर. वजे सरांनी सांगितलं ते खरंय. काही वेळेला खरंच म्हणजे व्हर्च्युअल कॅन बी अ कम्फर्ट मोड, पण ऍक्च्युअल इज रिअली इन अ कनेक्ट मोड. त्याच्यामुळे जेव्हा शक्य आहे तेव्हा अर्थविभागाच्या कार्यक्रमांना जरूर या अशी मी विनंती करते. आपण सेशन पुढे नेताना माझी नेहमीची आग्रहाची विनंती म्हणजे तुमचे मोबाईल प्लीज सायलेंट मोडवर टाका किंवा स्विच ऑन करा. आणि आपण आजच्या सेशन मध्ये क्वेश्चन आन्सर सेशन देखील होणार आहे, बट इट विल बी आफ्टर द प्रेझेंटेशन ऑफ बोथ दी स्पीकर्स. आजचा आपला नेहमी प्रोग्राम्स मराठीतनं होतात, पण आज प्रिडॉमिनंटली इंग्लिश आणि हिंदी तुम्ही वापरलं तरी सुद्धा चालेल, कारण भाषेला म्हणजे शिक्षणासाठी किंवा नॉलेजसाठी भाषेचं बंधन असू नये. त्यामुळे आम्हाला आज हिंदी आणि इंग्लिश तुम्ही वापरलं तरी देखील चालेल. याच्यानंतर मी आजच्या आपल्या दोन्ही वक्त्यांचे परिचय आपल्याला करून देते आणि देन वी विल बिगिन विथ द प्रेझेंटेशन. आजचे आपले पहिले वक्ते आहेत श्रीयुत क्रिस्ती मथाईजी. विथ अ स्ट्रॉंग academic background in finance field, Christy ji has a hands-on experience in equity research across multiple sectors. Currently, he is managing Quantum Long-Term Value Fund and Quantum Tax Saving Fund. So, मगाशी मी जो टॅक्सचा विचार म्हणजे टॅक्स इन्स्ट्रुमेंट्स बद्दल बोलले त्याची माहिती आपल्याला क्रिस्टी सरांकडनं नक्की मिळेल. He has a post. He is a CFA chartered holder himself. He also has a postgraduate diploma in management from IMT Ghaziabad. आणि आजचे आपले दुसरे स्पीकर श्रीयुत निलेश शेट्टी जी, मार्केट अनालिस्ट म्हणून पोर्टफोलिओ मॅनेजमेंटचा 18 वर्षाचा प्रदीर्घ अनुभव. या 18 वर्षात त्यांनी बरेच मार्केटचे चढ उतार बघितले असतील. सध्या ते क्वांटम म्युच्युअल फंड मध्ये इक्विटी पोर्टफोलिओ मॅनेज करतात त्यांच्या या अनुभवांमुळे किंवा इतक्या वर्षाच्या एक्सपिरियन्समुळे सस्टेनिंग इन द मार्केट याच्याबद्दलचे टेक अवेज आपल्याला नक्की मिळतील. ही हिमसेल्फ अगेन इज अ CFA चार्टर्ड होल्डर अँड ही हॅज अ चार्टर्ड ग्लोबल मॅनेजमेंट अकाउंटंट डिग्री फ्रॉम CIMA UK. सो आपल्याला आज म्हणजे नॉलेज बेस आणि हँड्स ऑन एक्सपिरियन्स याचा सगळ्याचा निचोड काढून आजचं प्रेझेंटेशन मिळेल याची मला खात्री आहे. मी आता त्यांना विनंती करते की त्यांनी आपलं प्रेझेंटेशन सुरू करा.
थँक्यू सो मच. माझं मराठी इतकं फ्लुएंट नाही आहे, तर मी इंग्लिश आणि हिंदीमध्ये बात करतो. मी ट्राय करणार मध्ये मध्ये मराठी. थँक्यू सो मच. इट्स माय ऑनर टू कम हिअर, come and present to you. Maharashtra Seva Sangh at the Arth Vibhag. This is my first time to come here and present. So just to give you a brief about Quantum and what we do. So Quantum Advisor, which is the parent company, was the first equity research house of India. We started in 1990 actually. At that time, even foreign investors were not allowed to invest in India. And we used to write research for foreign investors that time. Since then, we've been managing money for international clients. And even today, our major business is to manage money for sovereign funds and pension funds from North America and Europe. We currently manage about $2 billion, which is roughly about 17,000 crores on the offshore portfolios. The subsidiary is Quantum Mutual Fund. So we created that company in 2006, where we decided to apply the same principles that we use for foreign investors to manage the domestic portfolios of retail investors. But we did not do a lot of advertising or anything. So people had to do a lot of research to come and invest in Quantum Mutual Fund. But we've actually seen the entire journey of Indian markets opening up, managing money for foreign investors for a long period of time. And even today, we try to manage money. As we manage offshore portfolios, we try and manage money for domestic investors in the same. I know questions on economy, what is going to happen in Q2 and Q3. The presentation is primarily on the equity linked savings scheme or ELSS. And after that, in the Q&A, you can ask us anything. Me and Christy can answer all your questions on where we think the market is headed and what kind of scenario we see. But at least the presentation, the way we created it, is primarily on ELSS. Then later on, we can go into Q&A. So the reason we chose this topic, ELSS fund that works for you. A lot of people have invested in some of the largest tax saving funds, ELSS funds, and they are not happy with their returns. So the largest AUM fund is sharply down this year, and they have a very large corpus with them. So our idea with this presentation was to how do we give a framework to retail investors to select a good ELSS fund, which does not give you too much volatility and allows you to generate steady returns. You don't want a fund which is going up sharply and then falling down sharply in the next year. So hopefully you will get some sort of framework to how to select a ELSS fund, which you can apply in your own personal investing later. Now, again, ELSS is equity linked savings scheme. It is part of the 80C deduction. So from your salary, you get 1,50,000 as deduction, which lowers your taxable income. So there are two equity options there. One is pure equity ELSS, which is called equity linked savings scheme. It is nothing but a mutual fund scheme where you can invest. You have a 3-year lock-in. आपका 3 साल का lock-in होता है उसमें. And then you generate equity returns. The second is called a ULIP, unit linked insurance schemes technically, where they combine insurance and investments. Now, this is never a good idea. ULIPs, you want to do your insurance separately and investment separately. The origin of that scheme is insurance companies charge fees for managing your for the insurance cover that they give, right? And they realize, what can we do to increase that fees quotient? So then they said, why don't we take money as investments and we charge insurance fees as well as asset management fees and combine that and sell it to retail investors. The problem with that product is you don't even get adequate insurance cover. And because the fees are double, you have mortality fees or insurance fees plus investment fees, your returns are also lower than a pure equity scheme. So at least my advice to investors is, if you're trying to do investments and insurance, always keep it separate. Don't combine and create one product out of that. Make your investment separate and buy a pure term cover for your insurance. You get a very high insurance cover as well. There are other fixed income options, but because people are trying to save for their retirement for very long periods of time, you have your PPF, your NSE certificates, tax saving FD. Fixed income investments rarely give you returns above inflation. So after a long period of time, you realize the corpus is not that big and the time value of money. So time value of money is nothing but, अगर आज आपको कोई चीज खरीदने के लिए 10 रुपए लग रहा है, 10 साल के बाद वो सेम चीज खरीदने के लिए आपको 100 रुपए लगेगा. फिक्स्ड इनकम बिकॉज आपको गारंटी रिटर्न है, वो रिस्क भी नहीं लेते, तो आपको रिटर्न भी इन्फ्लेशन जितना है उससे थोड़ा ही ज्यादा देते हैं. तो आप नेट आप इन्वेस्टमेंट क्यों कर रहे हैं? आपको आपका कॉस्ट कवर करना है, प्लस आपको एक सरप्लस जनरेट करना है कॉस्ट के ऊपर. अनफॉर्चुनेटली वो फिक्स इनकम प्रोडक्ट बास्केट जीरो रिस्क प्रोडक्ट है, आपको रिस्क नहीं है, आपको जो रिटर्न है वो मिलेगा, बट सरप्लस जनरेट नहीं कर पाते आपके लॉन्ग टर्म इन्वेस्टमेंट से. एंड देयर आर अदर्स, इंश्योरेंस प्रीमियम, एनपीएस, इवन योर चिल्ड्रंस ट्यूशन फीस इज पार्ट ऑफ एटीसी डिडक्शन. आप जो स्कूल फीस भरते हो बच्चों का, वो भी एटीसी डिडक्शन आता है. हमारा ऐसा मानना है कि ELSS is the best product within that category because it is the only pure equity product that is available for you, and equities over a long period of time can generate that surplus above inflation, which most other products cannot. And I'll show you returns of each product later on. But within, so the way I advise investors is, how do you go about doing your ATC investment? अगर आपको जो कंपल्सरी इन्वेस्टमेंट करना है, सपोज आप बच्चों का ट्यूशन फीस भर रहे हैं, आपका ईपीएफओ का डिडक्शन हो रहा है, वो आपको वैसे ही करना है, आपके पास ऑप्शन नहीं है, तो वो एटीसी के लिमिट से हटा दीजिए. उसके बाद जो बचता है वो आप ELSS में डालिए, क्योंकि अगर आपका वैसे ही लिमिट एग्जॉस्ट हो रहा है तो यू डोंट नीड ELSS. आप प्योर म्यूचुअल इक्विटी म्यूचुअल फंड में डालिए, आपको लॉक इन का जरूरत नहीं, क्योंकि वो 3 ईयर लॉक्ड इन है, आप पैसा निकाल नहीं सकते हो उसमें से. तो आपका अगर एटीसी डिडक्शन 1,50,000 ऐसे ही एग्जॉस्ट हो रहा है, तो आप ELSS में मत डालिए, आप प्योर इक्विटी म्यूचुअल फंड में डालिए. लेकिन अगर आपके पास स्पेयर कैपेसिटी अवेलेबल है, उसमें there is limit available for you to invest, then you must look at ELSS because it is the only pure equity product available there which can generate significant surplus over long periods of time. Again, ये 3 साल 4 साल के लिए नहीं है, आप 10 साल 15 साल सोचिए, उसके हिसाब से इन्वेस्ट. Again, so how do you go about selecting the right products within that ELSS basket? You want products which generate a decent return for you above inflation. Above inflation return generate करना चाहिए आप ATC bucket में. Tax incidence should be lower or lowest if possible. आपको returns, काफी सारे products है उस category में ATC में जो people don't realize कि जब आप redeem करते हो, आपका जो tax slab है उस पे आपको tax भरना पड़ता है उसमें. तो आपको tax incidence भी कम करना है. Second is आपका lock-in period भी, you don't want to be locked in very long-dated products in case you need the money. And then it should be compatible to your long-term goals. Everything to be part of your long-term asset allocation plans. And Christy will cover that a lot more in terms of how to go about asset allocation. But ये 4 चीजें आपको सोचना है when you go about selecting your ATC investment. Now within this criteria, you look at where ELSS stands. Right? ELSS, it has the lowest lock-in period of 3 years amongst all the products category. Barring PPF, which is EEE. PPF एक ऐसा प्रोडक्ट है जहाँ पे आप इन्वेस्टमेंट के टाइम पे टैक्स डिडक्शन मिलता है, इंटरेस्ट इनकम भी एग्जेम्प्ट है, एंड कॉर्पस जो आता है वो भी एग्जेम्प्ट है. ELSS has the lowest tax incidence compared to all other products barring PPF. तो आप PPF हटा दीजिए, बाकी सब प्रोडक्ट्स से कंपेयर करते हैं, तो ELSS is very very tax efficient. सिर्फ 10% लॉन्ग टर्म कैपिटल गेन्स टैक्स भरना है. अगर आप हाईएस्ट टैक्स ब्रैकेट में हो, सपोज आप 30% टैक्स भर रहे हो, तो ऑल दी अदर प्रोडक्ट्स NSE सर्टिफिकेट्स और टैक्स सेवर बैंक FD, इसमें जब आपको आप रिडीम करते हो इन्वेस्टमेंट्स या इंटरेस्ट इनकम उसमें से जनरेट होता है, उसमें आपको अगर आप 30% स्लैब में हो तो 30% टैक्स भरना पड़ेगा. सो इट इज नॉट ओनली one of the most tax efficient, but it also generates it has the lowest lock-in period and also generates fairly decent long-term returns above inflation. So how much returns have ELSS generated? So let's say you invest at 1,50,000, you assume 12,500 per month of investments. to reach that 1,50,000. Right? Your investment amount would be 30 lakhs over a period of 20 years. That is the cost of investment. That 30 lakhs, and we just took the BSE 30 rate of return to calculate that ELSS return. That 30 lakhs will go on to become 1.43 crores. It is just what the index has given. A lot of mutual funds have done a lot better than the index. But even if you just got the index return of BSE Sensex, your multiple would have been 4.8 times of your original investment, which is by far the highest compared to all other categories. So equity is the only asset class which generates a substantial surplus over inflation. Most other asset classes, they give you guaranteed returns, but they do not generate substantial surplus over inflation, which is what you want when you're trying to retire. But again, it comes with risk. It is not a linear return like other asset classes. So most of the asset classes, invest in NSC, PPF, or bank saver, FDI. If they tell you 7% return, you will get 7% return. ELSS returns are never guaranteed. Could be 20% one year, minus 10% next year, plus 10% the year after that. But the assumption is because you're investing in companies and their businesses are growing over a period of time, because these companies are much larger, your returns will also be matched to those companies' returns. And India has some fantastic companies which generated very strong returns over a period of time. So there is no other asset class within that 80C bucket which matches anywhere close to ELSS returns. Hence, for us, at least my default choice of investing in ELSS, in 80C is ELSS. I don't even look at other asset classes, barring insurance or something which I'm buying. That insurance you must buy because you're trying to protect your family. But apart from that, most of my surplus in 80C goes to that ELSS bucket. Don't look at other assets. So ELSS again offers you returns which are much above fixed income, but fixed income will offer you guaranteed return, which ELSS cannot. But ELSS can generate substantial surplus over inflation, which other asset classes cannot. It is ideal for your very long-term goals. Just because the lock-in period is 3 years, you don't want to invest and withdraw after 3 years. Equity as an asset class, by and large, is a very long-term asset class because companies tend to take a long time to grow substantial size. So think of Infosys in the early 90s. It was a very small company. Today it's a very large company, right? People who have bought Infosys at that time, today are multi-millionaires in some sense. So it takes a very, very long time to generate wealth. So it is a very long-term asset class. And the returns are not linear. It can be up and down every year. So what are the things that you should look at while selecting an ELSS fund? Right? First thing you have to understand in any mutual fund that you invest in, ELSS or any other, is what is the style of that fund? How is the fund manager selecting the investments? So there are different styles of investing. There is something called a growth style. So growth style is people want very high growth companies. They are ready to pay very high valuations for that. They don't mind paying very high cost price for that company because they assume it is growing fast. There is another style called value style where they are very, very clear. They will not overpay for a business. They would wait patiently till the price comes to their level. So first you have to understand what kind of style works for you. And growth style tends to be high return, high risk because they go up and they fall down quite rapidly. Value style tends to be lower risk. Sometimes they can generate lower returns also because they are taking lower risk. And there are styles which fall somewhere in between. Some try to match growth and value. You want to be very, very clear what kind of fund you are investing in and not be surprised later. So you see a fund which is going up by 50% in 1 year when the market is flat and you think it's a great fund, let me invest there. But he's generating those returns by taking abnormal risk, right? And that risk sometimes plays out and suddenly you see funds falling quite sharply. So the largest AUM in ELSS is in a growth fund. And that fund has not done very well this year at all. It has fallen quite sharply this year. And now it is underperforming in 1 year, 3 year, 5 year, 7 year, which was not the case 3 years ago. 3 years ago, they were the star fund in India. Hence, a lot of money went there. So you have to understand what kind of style that you are getting into. How is the fund manager trying to manage his portfolio? And secondly, how is the fund performing across different cycles? You don't want to just look at 1 year returns and say, last year it has done well, let me put there. Suddenly, next year he will not do well. want to see long-term track record and whether long-term track record is good for this fund manager. Some funds generate great returns in 1 year and then 5 years very poor returns. So just seeing how the fund behaves in different cycles helps you select. Ideally, ELSS or equity mutual fund investing is supposed to be investing, not speculating. So if you're buying into a company, if the fund manager is investing, the business doesn't change every month. It takes a long time. It takes 3 years, 5 years for the businesses to play out. So there is something called a churn ratio. Churn ratio is how much buying and selling is he doing in the fund. So if he's actually investing, he should not be churning the portfolio that much because he says this is a good company. I want to buy into this company. After buying, the business still takes 2 years, 3 years, 4 years for the story to play out. So if he's churning very aggressively in the portfolio, that means he's not doing investing, he's speculating in the portfolio with your money. So you want a fund with a lower churn ratio. And ideally, you want a fund which is buying good quality companies. Unfortunately, what my personal observation is, मैं क्या देखता हूँ, because ये 3 साल का lock in है ये product में, fund manager को पता है people are not going to redeem, they tend to take more risks and they buy very small companies and mid-cap companies in the portfolio. Now, when you go down in the quality scale, they can generate higher returns, but they also give you a lot of risk. And when the market falls, these companies fall a lot more. So a lot of the ELSS funds have fallen quite sharply because of the higher concentration in mid-cap and small-cap companies. You need to be very careful. See, 80C is already giving you a deduction. When you are investing, assuming you're in the higher tax bracket, whatever money you're investing, 30% is already back to you in year 1. You don't want to take unnecessary risk. As long as you're making steady state equity returns, your real returns are almost 17-18%. So 15% equity returns plus the tax deduction that you're getting in year 1 for that. After that, you don't want to take unnecessary risk. As long as you're generating that kind of return, it's a great investment avenue. You have to be very careful of selecting what kind of ELSS fund you are investing in. And I'll give you a numerical example to explain my point, right? Let's take 2 funds, and this is a real example that we picked up, right? There are 2, इसमें 2 fund है. Fund 1 है, जो year 1 में 90% ऊपर जाता है, and year 2 में 75% गिरता है, right? आपने 10,000 rupees invest किया है. एक दूसरा फंड है जो year 1 में 45% ऊपर जा रहा है, and year 2 में 44% गिर रहा है. How many people will invest in in fund 1 over here? You can just raise your hands. Okay. How many people will invest in fund 2? Okay. So majority, at least out of the people who voted, said fund 2 is what they would invest in. Let's take a calculation in terms of how the numbers play out. So fund 1 goes up by 90% in year 1, falls by 75% in year 2. Your initial 10,000 rupees is now worth 4,750 rupees because it has lost so much value while falling down. You're now down technically, 60% from your original cost of investment. There is another fund which looks very boring. It goes up 46% in year 1, falls 47% in year 2. So at the end of year 1, when you compare fund 1 and fund 2, you will think, what is the fund manager doing of fund 2? को पता ही नहीं कैसे invest करने का. Look at this fund 1. इतना great fund है. 90% return दे रहा है. But when the market is falling, he falls less. He's down 47%. You are still down from your original cost of investment. You're down, say, 23%. But fund 1 to catch up to fund 2 has to rise by 63% now. There is a big gap opened up between fund 1 and fund 2. That is the reason a lot of mutual funds, once they fall, it takes a long time for them to get back to their NAV because they're losing so much money when the market falls. Some of the best investors in the world, आप सबसे बड़े investors ले लीजिए, Warren Buffett, Charlie Munger, Prem Vatsa from Fairfax. सबसे बड़ा lesson है market में investing का कि आप downside protect कीजिए. जब market गिरता है, आप उतना गिरिए मत, तो आपको उतना upside बनाने की जरूरत ही नहीं है long term returns बनाने के लिए. एक बार आपने downside में इतना पैसा lose कर लिया, आपको original cost में आने के लिए इतना risk लेना पड़ेगा, आप कभी आओगे ही नहीं वो NAV में. तो 2008 में ये बहुत सारे small and mid cap funds थे जिन्होंने इतना रिस्क लिया था प्रोडक्ट्स में, पोर्टफोलियो में, एंड काफी इलिक्विड नेम्स में उन्होंने इन्वेस्ट किया था इन प्योर स्पेकुलेटिव स्टॉक्स. जब लीमन कोलैप्स हुआ, दीस फंड्स फेल बाय 75-80% And even today, they are below that NAV of 2008. They've not even reached that NAV despite the small and mid cap upcycle that has happened. So, आप जब ELSS में invest कर रहे हैं, be very very careful what kind of fund you are selecting. जो fund एकदम sharply ऊपर जा रहा है and sharply गिर रहा है, that is especially not ideal for retail investors. You want a fund which is generating steady state return without too much volatility. This data we pulled out to compare what is happening in the market. So the funds that you see 1, 2, 3, 4, 5, they are the largest AUM tax saver funds today. We could not name them because SEBI has restrictions, but we took the largest 5 tax saver funds or ELSS funds in the market today. So this is the largest AUM fund, and by a very big margin, it is the largest AUM fund in ELSS. This year, when most, at least in CY22, when the market was up and when most funds were up, this was sharply down because again, it was buying very expensive companies, very high growth companies. And last year, there was a big sell-off in growth style. So of course, people looked at this return when other funds were not doing that well. This company was doing well, and people bought into their AUM just zoomed up and ballooned. And काफी लोग ने invest किया वो fund में. But ये साल people are very very disappointed, saying and अभी तो काफी सारे issues चल रहे वो fund में कि वहाँ पे fund manager को भी निकाला गया है, CIO भी change हुआ है. But our advice is ये सब इतना volatility जब आपको दिखता है up 25%, down 11%. That should tell you that ये काफी volatile fund है. It is not for you. Firstly, the largest AUM is in this fund, and most people have lost money last year in that fund by a very large margin when the market is going up. So at least the framework that I'm trying to tell you, मैं जो explain करने की कोशिश कर रहा हूँ, what you need to do is invest for the long term with an asset allocation in mind. Do not invest in very volatile funds. Invest in very steady state funds or generating returns over multiple cycles without taking too much risk. And amongst the 80C bucket, so what you, अगर आपको जो compulsorily invest करना है insurance या EPF का, वो हट के अगर आपके पास पैसे बचता है, ELSS should be the number one option that you should have, purely because long term में it is the only equity scheme available in that option basket. It generates surplus return over inflation, which most other fixed income products will not be able to give you. So I will probably end my session here and come back later for Q&A. But I'll ask Christy to explain how they are managing the tax ELSS product within the quantum basket. Thank you so much.
Yeah. Thanks, Nilesh, for that. So some of the tenets of a good fund that Nilesh spoke about, one of being it should be extremely liquid. It should be, there should be a definitive style, be it growth, value, or somewhere in between. And it should be process oriented and so on and so forth. So various tenets of a good ELSS fund that Nilesh spoke about, if you were to compare it against what quantum tax saving fund does, so we have a very clear process, that is a clear process and a style, that is value style, which is more focused on the downside protection, as opposed to, of course, we participate when the market goes up, but we are extremely cognizant of the risk in the portfolio and also cognizant of the fact that drawdowns, when it happens, that are we safe? So that is our key focus, and hence the value style. And we have stuck to it despite the cycles, since our inception, we have stuck to that style religiously. So in quantum tax saving fund is a value oriented fund with a perfect focus on that style. And also we try and get all those quality large mid cap allocation. The small cap is significantly lower in our total mix because we think there are significant risk in those buckets. But by and large, we have been able to create a portfolio of fairly decent quality large and mid cap companies over a period of time. And also our churn rate, just going back to the previous slide, our churn rate, which is how much a fund manager, rotates his sort of portfolio, is among the lowest. That speaks about the long-term orientation of the fund. We tend to hold the stock typically, upwards of 4 or 5 years. Eventually, that's, some of the stocks have been much longer with us if you were to look at the fund. Moving ahead, just wanted to touch upon the process that we kind of follow. How do we go about the stock selection, and so on and so forth. So we have a dedicated team of analysts which looks at a lot of stocks. So we cover close to about 200 stocks out of broadly 500, 600 stocks which are there. And this 200 is arrived after applying a stringent liquidity filter, a stringent corporate governance filter. We weed out all those companies, which were in the limelight recently and which have caused a lot of heartache to investors, if you really were to think about it. And we have a significant focus on corporate governance. After weeding out all those companies, we actively track close to about 200 companies. And, our analyst team religiously tracks it. They meet with the company quite often. We have a policy of meeting them in their office, doing channel checks, visiting, various dealers and so on and so forth. So our analyst team is mostly on ground as opposed to sitting in office trying to do research. So we've been able to do that. And each analyst, is supposed to make a very detailed model going back a long time in history and projecting 5-year hence, EPS, cash flows, what have you. And this is that we also assign fairly long-term valuation bands. It could be price to earnings, price to book, EV by EBITDA, and assign it to these companies. These are fairly long-term cross-cycle multiples that we are attaching to these companies. And we arrive at a buy and sell price for each of the stocks, each of the 200 plus stocks that we have in our database. So at any point in time, our database is always updated with a live buy and sell process. And portfolio team gets kind of active whenever the stock comes below that buy price. So in terms of, our sell price is typically what we think should be the intrinsic value of that company. By intrinsic value, this is the fair value of the company that we think it should trade at. And in our process, we typically buy these companies at least 40% discount to the intrinsic value. And therein lies our margin of safety, because we think 40% is a steep enough discount to the intrinsic value, and we identify catalyst that will take these companies to that intrinsic value over a period of time. For some of these small, very high quality names, those companies have never traded at 40% discount. So we kind of arrive at a slightly lower discount rate, which is about 25%. But by and large, this is our buying process, and we sell, whenever it hits our sell limit. So we have a very clear philosophy of exiting out of stocks. So we have made some tweaks for very high quality names. We exit out if, our view on the company changes, long-term view on the company changes. So these are some of the possibilities in which we kind of exit out of stock. But we, in value style, we buy each company, make sure that we enter into a company at extremely attractive valuation multiples. This is also extremely important slide from a fund perspective. So whenever we have close to over 26, 27 stocks in our portfolio currently, and each of these stocks have a sell limit, which is arrived after much discussions, after much deliberations. And we have something called an upside potential. Upside potential is essentially the difference between the sell price and what the stock is trading at the current market price. So essentially the CMP of the stock versus the sell price, the difference of that is the upside potential for a particular stock. And if we were to look at, we can arrive at a portfolio upside potential by multiplying the weights that we assign to each of these stocks and the upside potential. So let's say stock A, the sell price is close to, the buy price is 100 and the sell price is 150. And let's say the stock is currently trading at 100 rupees currently, right? So my upside potential becomes 50% for that. And I have a weight to that particular stock. It could be 5%, 6%, so on and so forth. So if you were to take weighted average of these upside potential versus and the weights, we arrive at a portfolio upside potential. And what is interesting to see is the yellow line here is our projected upside potential. We've been tracking this since inception, that is going way back to 2005. And the yellow line is the projected upside potential, and the blue line is actual NAV that was realized by the fund, right? And what we see is both lines are kind of tracking very closely. And if you see the net result, rebased to 100, our expectation was close to about 8x returns from 2005 levels, whereas the returns is close to about 7.6 near about. So it's very closely tracking, barring some of the global dislocations that we have had. For example, in 2008, where we see a significant deviation is when the global financial crisis happened. And there you have the taper tantrum and the COVID fall. But by and large, the catch-up is very fast. So what this essentially showcases is that our process is very predictable. If you're an investor, you should be able to predict how the fund will perform, because we have a very, we religiously stick to our principles, processes. So, yeah. And this is how the portfolio of the fund currently looks like. I don't know if that is clearly visible to you, but we have significantly positive allocation, overweight allocation to few of the sectors, such as consumer discretionary. Essentially, this is the auto space. We are quite bullish on the two-wheeler auto space. We expect volume recovery, which has not come in for a while for various reasons, come back over the next few years, and that should drive, the auto sector, especially the two-wheelers. We are also quite overweight on the financials, which includes the bank, the NBFC. So increasingly, we are finding a lot of opportunities within the saving buckets, that is, be it AMCs, insurance. We think, India is in a cyclical upturn in terms of economic growth, and banks should lead and be able to capitalize on the cyclical upturn, which could last anywhere between 2 to 4 years or even more. And we're also, kind of positive on utilities, select utilities, because we think they trade at quite attractive valuations. Some of the notable places where we are absent is consumer staples. We have possibly zero weights to that, and it has been like that for quite some time now. And the reason is we've never been comfortable with the valuations. And incrementally, what we are seeing is in a global rising interest rate environment where there is broad-based growth that is being shown across the economy, the multiples are kind of coming down, even for, the staples, which commanded very premium valuations in, few years back. And this is the characteristic of our portfolio. So if you were to just benchmark it with respect to the indices, we just look at BSE 30 index, one of the most popular index. So our PE ratio, which is price to earnings ratio, is significantly lower with respect to index. It's somewhere around 11.4 versus 15.9. It's about 29-30% discount to the valuation, the multiples. As well as the EPS growth is somewhere a tad bit lower, but somewhere in line with the index. The PEG ratio is superior. So whenever there is a market fall, our portfolio should ideally fall much lesser than the index. So just to conclude on the tax saving fund aspect. So, as Nilesh said, this is ELS's bucket is an extremely attractive way to generate wealth over a long term, because at the first place itself, you get a kicker in terms of, the deductions that you get. And quantum tax saving fund is kind of adequately positioned in that bucket. If you were to look at relative comparison with respect to style, with respect to long-term orientation, we score well in all of those parameters, right? So that's about ELSS, which is an equity component, but we also strongly advocate a very good asset allocation. Here is a very interesting slide. If you were to, this goes way back to 2006. it showcases how various asset classes have performed in various periods. The case in point is Sensex, what you've taken is Sensex, gold and bonds through, your debt allocation that you get. And, none of the years it's, all equity which has done well. It's in a sense, like if you were to just look at it, there is always big volatility associated with equity. So putting all your eggs in one basket is in a way very difficult. So imagine a year like 2008, where the Sensex fell about 52%. Imagine you had 100% of your allocation to equities, and you were in need for some money, maybe because of various reasons. And suddenly your allocation has been reduced by 52%, and that is not the time where you have to liquidate equity. It would be a disaster if you were to do it. So it is always appropriate balance out our asset allocation within the other asset classes, be it bonds or be it gold. Right? If you look at the last 2 years, it is gold which has kind of done well. Primarily because of the rising risk aversion, the risk on trade that is there in the economy. So people are extremely, the interest rates are rising, and there is question marks on what equities can do. So, we want to construct asset allocation basis these three asset classes. Equity, we think it is a long-term product, minimum 3-5. It could be a decade-long product as well if you can stay invested. Debt is for your regular income needs, and we'll touch upon what we want to speak about debt. We want to, we think debt should be you should not take risk such as credit risk or in fact duration risk. We should be in extremely liquid debt funds. Gold is a diversifier. There is, if you look at the historical data, and you look at the correlation between how equities have moved, how gold has moved, so it's a pretty negative correlation. So that tells you when equities fall, chances are the gold will do well. So gold is it's like an insurance. You wish you never have to claim the benefits of that, but it's a thing that you should have in your portfolio, right? So then we come to our 2080 strategy, which also is popularly known 12-20-80, as we market it. So here, we speak about 12 stands for 12 months of your living expenses. This is something that you should be extremely liquid. You should be able to get this money anytime you want. Imagine in a down year when there is a global recession across, there are job losses, and suddenly somebody is out of job. And at that point in time, the go-to place is the savings. At least he should be able to have certain savings to see him through for the next 6-12 months. And this can be tweaked according to the stage a person is in. For a young person, maybe 12 months might look too steep. So we can change that. That could be done. But we advocate on average 12 months of living expenses to be put in an extremely liquid fund. So case in point is a quantum liquid fund. So here we take, we do not take either the duration risk. We have extremely short-term investments, 3 months, government securities is primarily what we invest in. So the change to interest rate is minimal, though there are risks in that as well, but it is very minimal, and we do not take any credit risks. So you can liquidate the portfolio whenever you want, and this is your safe money. This is, the foundation, if we were to term it. And then we, with the total amount of expenses gone, let's say you have 100 rupees portfolio, we advise allocating 20% to gold. And gold here is your diversifier against, the fall in equities, or anything that can happen. And because of the extreme strong negative correlation with equities, it acts as a very good diversifier. And we have products such as gold savings fund, gold ETF, that can be looked at for this particular, to meet this need. And then the rest 80%, we, advise allocating to a basket of funds. If you were to note, we've just, asked for allocation to long-term equity to be kept at just 15%. And we have another product which is ESG fund at again 50%, 15%. The rest, in the market, there are and 30, 40 AMCs with so many funds. And for a retail investor to choose the best fund, it is a big task. So what we have done is we have a team which kind of consistently looks at all the mutual funds, all the offerings that there is, and selects a combination of 9 or 10 funds, which is across market cap. It could be large, small, and mid. It could be across styles. It could be growth oriented, a mix of value. And we curate these funds and make something called quantum fund of funds. And for this, we charge extremely small, fees. But this is a very good. So if an investor were to go ahead and directly invest in these funds, he might save that 25 odd pips, which we pay to quantum. But this is the. But we also keep looking at it. We keep meeting the fund managers to understand their philosophy. So 70% of that 80%, 80 rupees allocation we think should be to quantum equity fund of funds, 15% to ESG, and long-term equity at 15%. And the ELSS product will actually fit in that 15% quantum long-term equity value fund allocation, right? So this is our broader portfolio construct in terms of asset allocation. And just to highlight, if you were to simply do so, this is I've just taken the indices. So let's say when we say you have to allocate 80% to equities, so the 80% allocation here is to an index fund, BSE Sensex 30, and similarly with debt and as well as the gold fund. And what we see is that if you were to, the first column tells you that if you look at the returns versus a pure equity product, the returns may be a tad lower, but when the drawdown, when the market falls, you're much protected by this product purely because you have a 20% gold allocation and because of superior. It is not reflected here, but if you were to think of the best funds that you were to curate, so the returns could be better. So, in a sense, there is much lower drawdown and almost slightly lower at par returns if you were to look at from a pure compared to a pure equity product. So, so that's broadly on asset allocation, and we have a very simple, way to go about it. It is there on our website. If you can see, the various tabs that are out there, so you can, if you were to, I don't know if this is visible. Okay, so you can write in your punch in your monthly expenses that you want to keep, and how many months of expenses that you want to keep, and how much of allocation that you want to make to us, this entire asset allocation bucket. It will just compute all that at one go and show it to you, so it becomes extremely easy. So this tool is there on our website. It would be, a lot of investors have taken advantage of this to be able to arrive at suitable asset allocation. And we also have a mobile app facilitated. It just makes things easier. So friends, that's broadly on ELSS and asset allocation. This has been quantum tax savings performance. So since inception, we've been able to do well, beat the index. Near term, our returns have been extremely good because, we believe that this environment kind of suits us as a value style, because even as there is global uncertainty with rising interest rates, and there is most risk aversion. So that sort of helps a fund like ours, which has a value bent with downside protection. So we have been doing pretty well in the near term. 5 or 6 year, this was the period which was broadly brought down because of our, the style of value was not in favor, but we think we'll be able to recoup on all those parameters as well. So this is the regular. So I'll just leave it out there for you to just see. You can also find this in our, website. It's readily available. So broadly, that's it. So we're happy to take any questions.
we've received a lot of questions already. I will try and they're legit. So we'll try and answer all of them, and then even after that, if you have more questions, just raise your hands and we'll try and answer as much as you can. So the first question, I think, again, was part of the intro, which I would like to take. And I think it was mentioned that what about the future? How does 2024 look? Or even 2023, how does 2023 look? Maybe Christy, you want to answer that, and then I'll just add it. I'm assuming this is from an equity market perspective. Whoever asked this question, how they think equity markets will do in 2023 and 2000.
Broadly, if we were to look at the global markets, there is a lot of uncertainty, and we just keep hearing of global interest rates and the impact of it. What have you? You just heard of a major bank in US going under, and so it's the interest rate rising as a phenomena is always riskier for the businesses which are just constructed in a haphazard way in with just the liquid money that there is. So businesses which are on shaky grounds, which have survived on liquid easy money over the past 5 years, are some what we find is they're suddenly under a lot of stress, and that has been seen globally, and we'll have some of that impact globally. But just talking about India, after a fairly long time, that is almost about 7-8 years or more, we are seeing a cyclical upturn in Indian economy. And unfortunately, I do not have slides, but that is reflected in the capex intensity across private and public space. That is reflected in the utilizations levels. That is reflected in a lot of GST collections and so on and so forth. So our read for in the near future is that India is broadly in a cyclical upturn, and there could be some impact of these global headwinds which may impact the export segment or some job creation as a result. But by and large, we are quite positive on Indian, economy and as well as the stock. And this is, if you were to think about 2016, 17, we have been extremely negative on all those periods on the Indian, economy, and we've been speaking about it, conveying to our investors. But post-COVID, these 2-3 years, we see a lot of green shoots of a cyclical upturn, which could last 3-4 years. So in that context, the company should do well. This global headwinds may have a, quarter-to-quarter impact. But apart from that, I think India, by and large, should do well. Yeah.
I'll just add to what Christy is saying. So question is, question that ये साल है अगले साल मार्केट में क्या होने वाला है, कैसे लग रहा है मार्केट? आपको दो चीज में डिफरेंशिएट करना चाहिए. एक होता है अंडरलाइंग कंपनी का वैल्यू एंड अंडरलाइंग कंपनी का प्राइस. वैल्यू जो है दैट इज डिपेंडेंट ऑन द कंपनी. सो मैं ज्यादा सेल करता हूँ, ज्यादा प्रॉफिट बनाता हूँ, कंपनी का वैल्यू बढ़ रहा है. प्राइस जो है लॉन्ग टर्म में वैल्यू से डिपेंड करता है, बट शॉर्ट टर्म में इट कैन चेंज फॉर वेरी. सो 2008 में इंडियन कंपनीज का वैल्यू चेंज नहीं हुआ, बट क्योंकि फॉरेन इन्वेस्टर्स को पैसा निकालना था, वहां पे उनको रिडेम्पशंस आया, उनको रिस्क नहीं लेना था, दे डिसाइडेड टू सेल अग्रेसिवली. उसकी वजह से कंपनी का प्राइस गिर गया, वैल्यू नहीं. अब जिस तरह से मार्केट है, स्पेशली लास्ट 1 ईयर, क्योंकि वेस्टर्न कंट्रीज में इंटरेस्ट रेट्स बढ़ रहा है एंड उनको रिस्क कम लेना है, क्योंकि उनको वहां पे अगर 5-6% इंटरेस्ट रेट वहां पे मिल रहा है, उनके लिए काफी अच्छा है वो 5-6%. They are used to much higher interest rates, but they are used to much lower interest rates. So interest rates are going up, so they are trying to reduce risk. They're saying if my fixed income product is giving me this return, hence last 1 year they are selling very aggressively in the market, and this can continue. If interest rates go up, they will continue to sell aggressively. That might impact the price of companies in the market if suddenly there's a large amount of selling. So if this big bank blows up, and usually banks, they are all connected. This bank must have borrowed from some other bank, so that bank gets into liquidity problem. उसके depositors फिर आएंगे वहां से पैसा निकालने को, and that bank might have linkages to some other bank. Creates a chain reaction in the Western world. So there are risks on the West. So there is a war going on. There is a issue on the Western world in terms of banks going bust. That can lead to a lot of foreign investors selling. But the way India is positioned, जिस तरह से हम position करें, especially after 2014, रघुराम राजन जब आए थे, 2013 में एक पेपर टैंट्रम करके एक इवेंट हुआ था. तो फर्स्ट टाइम यूएस फेड ने बोला था हम इंटरेस्ट रेट बढ़ाएंगे. तो वो डर के मारे ही मार्केट में बड़ा सेल ऑफ हो गया कि इंटरेस्ट रेट बढ़ने वाला है. यूएस में बड़ी यूएस स्पेशली इमर्जिंग मार्केट्स में इंडिया, ब्राजील, रशिया सब जगह सेल ऑफ हो गया. रघुराम राजन वाज वेरी वेरी क्लियर, बैंक्स हैव टू बी क्लीन्ड अप. जो भी एनपीए है पहले आप दिखाओ कितना एनपीए आपका एंड आप रिकॉग्नाइज करो. फॉर्चुनेटली last 8 years has gone in that. Banks have just kept on showing NPAs and kept on, so banks have just cleaned up their books. One of the reasons COVID crisis में Indian banks को इतना impact नहीं हुआ because they were very very clean on their balance sheet. A lot of people had already written off bad loans or recognized bad loans and they were in the process of writing off. So Indian financial system is very very safe today. It is one of the cleanest it has been in the last 20 years. Banks don't have too much NPAs. They have written off most of the bad debts, and they have capacity. They have capacity to lend. They are waiting for corporates to come and borrow from them. Corporates don't want to do that as yet. Last 2 years, demand has been good, so their utilization is gone up. They are now just over 70% as per RBI statistics. 70%. Once that number reaches 80%. Suddenly you will see most of the companies start announcing capex. They will go to banks and they will borrow. So the way the Indian economy is positioned, where banks have cleaned up, last 2 years demand has been good, utilizations are going up, and most of the companies that we are meeting, larger companies, nobody has told us demand is weak for them. They are actually seeing very strong demand. And you see data on the ground. You look at GST collections, you can look at air traffic, you look at especially hospitality sector, people are just ready to splurge. And income growth has also been very high last 2 years. You talk to any company, attrition is very, very high. Some employees are quitting their job and moving to some other job at a higher pay, and they are forced to give higher salaries to people to retain them. So it can happen over the next 1-2 years that because of large sell-off from foreign investors, suddenly markets correct. But that does not mean the companies are not doing well. Indian companies are doing very, very well right now. And we think it is just a natural upcycle. So 2014 to 2013 to 2020, GDP growth went from above 7% and came down to around 4%. It was a big slowdown in GDP growth which happened. COVID created a bottom for the economic growth. We fell sharply, almost 20% in 1 quarter, and over a period of time, I think 13-14% negative growth. From that bottom, there has been a rebound. So after 7-8 years of weak economic growth, we are now in a natural upcycle where GDP growth is rising. So if there is a big correction in the market because of some foreign investor selling because he has pressure from his home country, that will be a great opportunity to buy. You should go ahead and just blind. So Indian economy since 1980 has grown at 6.2% average GDP growth, real terms. So most companies' physical output has grown at 6.2%. If you take inflation of 5-6%, so companies' revenues have grown at 12-13%. Index companies tend to be better run companies. They tend to grow faster than the normal average company in the economy. Hence, you see the index companies' returns. Index has given you a return of 14-15% CAGR. It is nothing but the revenue growth of index companies. The equity prices have matched that. There is no reason to believe next decade and 2 decades that cannot continue. We are still at a very small base in terms of per capita income. Government has been very aggressively spending over the last 2 years. We are now seeing signs of private sector announcements come in. So CMI, which is a database company, has put out data. And you are seeing announcements by private sector for capex going up. These are just announcements. Sometimes there are announcements made and they don't translate into capex. But there are signs that private capex is poised to pick up. So if you have a very clean banking system with private sector poised to pick up and demand environment remaining strong, Indian GDP will be an outlier in the Western world, or at least in most parts of the world. So other countries are going into recession, but we will show very, very strong growth. Perhaps the fastest growth in the world for the next few years. China has actually slowed down quite materially. In that environment, Indian equities will stand out. So despite this selling by foreign investors, I expect them to come back at some point in time and again buy into Indian markets. So if you're trying to build a portfolio for the next 5 years, 10 years, this is actually a great time to buy and allocate with the next 5-year view or 10-year view. Mentally, you be prepared. The markets can fall 20% anytime because there are enough risks on the horizon. But that is a time you add more. When we track that upside number that Christy showed for the next 2 years, it is very, very attractive for us, what our portfolio is showing. And most of the companies that we are meeting are telling us on the ground demand is very, very strong. So I think we are very, very bullish for the next 2 years, 3 years in terms of equity returns. We think now is a good time to allocate. And if it falls, you should add more. Just be very careful in the kind of funds you're selecting or the kind of companies. Just stick to quality. Don't go in the small cap, mid cap speculative space. It is not that great a space. They've had a great run last few years, but I think if risk goes high, people don't want to stay in risky space. They want to stick to quality, and quality companies will do a lot better. So that is our view of what is going to happen in the next 2 years, 3 years. I've not classified questions based on sections, so I'll just take them one by one. How to analyze the stock price of any company? I'm assuming you're asking when to buy, when to sell. Maybe Christy, you can answer that.
So generally, the process that we follow is, we are completely bottom up in that sense, barring few assumptions in terms of GDP, currency, which is macro based. Everything else is bottom up. So we look at each company, we study each company's annual report. We religiously read all the earnings calls, listen to them. So we've been tracking that for quite some time. So, and we try and estimate or try and come up with, after studying all this, we also try and meet the management. For a retail investor, it might be difficult, but there are enough and more interviews and things that are online nowadays. The information asymmetry between a institutional investor and a retail investor has kind of decreased quite a bit because everything is online. So we try and get a view from the management, and then we do our own checks on the ground. We go meet the dealers, we try and get an understanding from the competitors, and that's how we freeze all our, we try and project how each company bases what it has done in the past, and we try and understand the environment that can come up in the future, and we sort of project 5-year earnings, estimates, and then we try and look at also how has this company historically traded, multiple wise, what valuations we want to give to those companies, and then we kind of arrive at a buy and sell. So as value managers, we do not, as Nilesh said, like some of the growth managers, we do not want to chase growth and pay, whatever the price is demanded. We want to, after we freeze our buy and sell limit, we want the company to come below our buy or at buy for us to enter that. And we kind of exit once we think the company has reached its fair value or intrinsic value, which, let's say in simple example, if you are running a firm, and you think at appropriate utilization, appropriate sales, what should be the value, a company should be accorded. That's sort of what the fair value is. And we kind of try and exit at that point in time. So this is broadly what we follow. And we continue to believe that, now the information asymmetry has kind of moved quite a bit between an institutional and retail to be able to understand. But you need to devote quite a lot of time to be in understanding stocks and so on and so forth. Yeah.
Just मैं थोड़ा चीज ऐड करूंगा. सी स्टॉक प्राइस एनालिसिस काफी कॉम्प्लेक्स चीज है, मतलब काफी सारे फैक्टर्स आपको देखना पड़ता है. मैं 2-3 चीज शायद आपको बताऊंगा विच माइट हेल्प यू. सी आप जब भी कोई शेयर खरीदते हो, आप क्या कर रहे हो? आप कोई कंपनी के मालिक बन रहे हो. बाइंग अ शेयर इज बाइंग ओनरशिप ऑफ अ कंपनी. पहले आपको देखना है ये धंधा मुझे अच्छा लगता है कि नहीं. तो आप कोई भी कंपनी का जब शेयर खरीदते हो, सबसे पहला है व्हाट बिजनेस इज दिस कंपनी डूइंग. Do I think this business has potential? Can it grow substantially over the next 10 years, 20 years? अगर आपको बिजनेस अच्छा होता है, आप खुद वो कंपनी के प्रोडक्ट्स यूज करते हो, यू थिंक इट्स गुड क्वालिटी प्रोडक्ट्स. सो एक इन्वेस्टर थे पीटर लिंच, जो काफी नामचीन इन्वेस्टर थे. उनका एक सिंपल रूल था, उनको कोई कंपनी का प्रोडक्ट अच्छा लगता था तो जाके उसमें इन्वेस्ट करते थे, अगर वो खुद यूज करते थे कंपनी का प्रोडक्ट. तो उन्होंने काफी अच्छे रिटर्न बनाए. तो मे बी दैट इज द फर्स्ट प्लेस टू स्टार्ट, कि मेरे को एक कंपनी का मालिक मैं बन रहा हूँ शेयर खरीद के, तो ये क्या कि कंपनी का प्रोडक्ट मुझे अच्छा लगता है. आप कोई बैंकिंग सर्विस यूज करते हो तो बैंक का सर्विस कैसा है, अच्छा लगता है, आपको लगता है बैंक ये अच्छा सर्विस दे रहा है तो ग्रो होगा. सेकेंड चीज अगर आप कर सकते हो, तो जब उसका शेयर प्राइस बढ़ रहा है तो किस चीज की वजह से बढ़ रहा है. तो उसका प्रॉफिट अगर 10% बढ़ रहा है तो उसका शेयर प्राइस भी 10% या 15% बढ़ना चाहिए. लेकिन अगर उसका प्रॉफिट 10% बढ़ रहा है और शेयर प्राइस 100% बढ़ रहा है तो कुछ डिस्कनेक्ट है. मतलब खाली बिजनेस के रीजंस की वजह से नहीं बढ़ रहा है, कुछ और रीजन की वजह से ही बढ़ रहा है. एंड आप जब भी इन्वेस्ट करते हो तो आई डोंट नो व्हाई, मैं अभी मेरे फ्रेंड्स भी है, फाइनेंस के फ्रेंड्स नहीं है, वो जब भी कोई मोबाइल खरीदने जाते हैं तो पहले तो अमेजोन ओपन करते हैं, 10 मोबाइल का ब्रांड स्टडी करते हैं, फीचर्स देखते हैं, इसमें ये चिप अच्छा है, इसका ये कैमरा अच्छा है, ये अच्छा है. फिर जाके क्रोमा के आउटलेट में आके देखते हैं कैसा है वो फोन. उसके बाद काफी एनालिसिस करके डिसाइड करते हैं ये फोन खरीदना है, प्राइस भी अच्छा है, इसका फीचर्स भी अच्छा है, बाकी सब एनालिसिस के बाद मुझे लगता है ये बेस्ट फोन है, उसके बाद जाके खरीदते हैं. तब जब शेयर में इन्वेस्ट करने की बात आती है, एज हम क्यों इन्वेस्ट किया शेयर में, उन्होंने बोला नहीं, मेरे दोस्त ने बोला तो मैंने इन्वेस्ट कर दिया. नाउ ये वही पर्सन है जो इतना रिसर्च करके मोबाइल फोन खरीदता है, बट जब शेयर्स में इन्वेस्ट करने की बात आती है तो क्या भी रिसर्च करने का नहीं है. मतलब किसी ने बोला ऊपर जाएगा, लास्ट 1 ईयर में 50% बढ़ गया तो उसने बोला ले ले और बढ़ेगा तो इसके लिए जाके इन्वेस्ट करते हैं. दिस इज नॉट द वे टू इन्वेस्ट. तो स्पेकुलेशन बोलते हैं, आप जुआ खेल रहे हैं. इससे आपको पता नहीं कंपनी करती क्या है, आपको पता नहीं प्रॉफिट कैसे बनाएगा, खाली शेयर प्राइस ऊपर जा रहा है इसके लिए मैं खरीदूंगा. 99% ऑफ द टाइम दिस विल एंड बैडली. आप लॉस करेंगे ऐसे सब इन्वेस्टमेंट में. तो आई कैन जस्ट टेल यू व्हाट नॉट टू डू, एंड इफ यू कैन डू द बेसिक थिंग्स कि कंपनी का बिजनेस क्या करती है, अच्छा सर्विस देती है कि नहीं, ये कंपनी का बिजनेस का प्रोस्पेक्ट्स अच्छा है, मैनेजमेंट क्वालिटी अच्छा है, आप ये 3-4 बेसिक चेक करके इन्वेस्टमेंट करेंगे, even if it is expensive, over a period of time, you still might be able to make decent returns. That is all I can tell you about investing. Otherwise, it's a fairly complex process. ये म्यूचुअल फंड के जो फंड मैनेजर, उनका बड़ा टीम है, रिसर्च एनालिस्ट का, प्लांट विजिट करते हैं, कंपनी के मैनेजमेंट से डिटेल्ड स्ट्रैटेजी सेशन करते हैं, जो आप रिटेल लेवल पे नहीं कर सकते हो, बट आप इतना बेसिक चीज एटलीस्ट कर सकते हो आप जब इन्वेस्ट करते हो. ठीक है, देयर आर 2 questions which I will combine together. It is on the 80C deduction. So the question is, all tax incentives have been removed in the current budget. Is that so? That is the first question. And second is, for 80C deductions, there are 2 options, old and new, which is beneficial for taxpayers. And is there any chance of scrapping old system? If yes, then what is the fate of these 2 tax saving products? Or these tax saving products? So, to give you a bit of background, so Mr. P. Chidambaram, when he was in the later years of the UPA government, had put a paper called Direct Tax Code. अभी गवर्नमेंट का ये मानना है कि टैक्स रिटर्न जो फाइल करना है इतना कॉम्प्लेक्स प्रोसेस नहीं होना चाहिए. इट शुड बी अ वेरी सिंपल प्रोसेस. ये मेरा इनकम है, इतना मुझे टैक्स लगता है, बेस्ड ऑन दैट इनकम, एंड आई शुड बी एबल टू फाइल. नॉट बी अ वेरी कॉम्प्लेक्स प्रोसेस. अनफॉर्चुनेटली इट इज अ वेरी वेरी कॉम्प्लिकेटेड प्रोसेस इन इंडिया. दुनिया भर का डिडक्शन है, दुनिया भर का एग्जेम्पशन है, काफी कॉम्प्लिकेटेड. आप अगर प्रॉपर्टी है आपके पास, रेंट पे चढ़ाओगे उसका अलग एक कॉम्प्लिकेशन है. So increasingly the government even then and now they are trying to see, can we simplify this system? Can we remove all these complexities and make it a very simple process where ये मेरा income है, कोई भी सोर्स से इस पे ये स्लैब में अगर मैं आता हूँ तो इतना मेरे को टैक्स भरना है. आई थिंक वो चिदम्बरम का जो ड्राफ्ट था उसमें, if I remember correctly, there was 0 exemption. Up to 10 lakhs there was no tax, and after 10 lakhs 10%, and up to 20 lakhs 20% ऐसा स्लैब बनाया था उन्होंने. Then UPA lost and that plan went to the freezer. Then this government is coming around to that plan, but they're very careful. अब इंडिया में क्या है, most of the people who pay their tax are at the lower end. High income कोई दिखाते नहीं है tax return में, barring salaried people who are high. Businessmen, so they don't pay tax. So if they move to that system overnight, suddenly there is an impact on the budget, saying that your income gets wiped out. So what they're trying to do is they're trying to gradually move to a system where they remove all this exemption and give you higher tax slabs for you to file. So now we have so last year they tried to introduce a new tax regime. So there are two tax regimes now. Old tax regime, जो पुराना चल रहा है वो चल रहा है, and the new tax regime. Last year the slabs were much lower, so nobody took it. This year they've raised the slabs, but so you can have a higher exemption limit, but without any deduction. Now, if you are in the lower tax bracket, it may make sense to move to the newer tax regime, where net tax that you have to pay because the tax rates are lower would be lower than the old tax regime, even after considering deduction. But people in the higher tax bracket will not go because of the deductions that they get. But yes, increasingly, that is the plan, to move to a system where you have a simple income, not have too much complication, try and reduce the work of CAs. I know there are a lot of CAs in your organization, so that it becomes simple for people to file their income statement. At some point, they will move to that system. They will remove all the exemption. So yes, all these products that are there, they will lose their validity. But say ELSS is nothing but a simple mutual fund which has been put in that bucket. So that mutual fund will continue. You will have other mutual funds that will continue. But specific investments in 80C, that all of deductions that you're getting, that may not be available in the future. Already in the new tax regime that you're there, they are not available. But yeah, at some point we will move to that system. They're trying to gradually, slowly move there. But yes, all these products will go away. It is up to you where you want to invest your money. I still think, so you might just choose an equity mutual fund. I still think if they allow that PPF EEE facility, that might continue, because EEE is a very, so exempt. आपको redemption में भी exemption मिलता है, tax नहीं है. That is a very attractive proposition. But all the other products may not survive. Actually. Is there anything you want to add? Yeah. Okay. Right. There's a question on index funds. Index funds are getting popular. Reason being that a lot of active mutual funds are not able to beat the standard market index, like Nifty, consistently over long periods of time. What is your say in this? So, आप basic benchmark में invest कर सकते हैं, BSE 30 या NSE 50. Last 10 साल में आप देखोगे तो majority of the funds have not beaten that index. Simple. So why don't I just simple invest in the index with low cost of investing? In TERs are very low, expense ratios are very low, and I generate at least market returns. Christy, you want to answer, and then I'll add something.
Yeah, so world over, if you were to look at it, index funds have kind of done well in a sense. Let's look at the example of Vanguard, and then there are subsequently so many index funds, and now people, at least in the Western world, just kind of invest in index funds. And the case there is, the markets are a lot more efficient. The price discovery happens very fast, as opposed to India, which still is some time away from that. But there is no taking that. A lot of funds have kind of failed to beat the index. And one of the reasons is, in India specifically, the way the index is constructed, it is very skewed, in favor of certain very large companies. While these companies need not necessarily be companies with great corporate governance practice. And, in the month of Jan-Feb, we have seen certain blow-ups that has happened, and those were index constituents. In fact, a lot of those were index constituents. And let's say, assume you were an index investor, what option did you have but to have your allocation to those names? Index, it's you're not taking an active call whether to include that or exclude that. So you might have to live with those uncertainties in terms of what comes in the index is absolutely beyond your control. It is based on free float market cap driven, which is so you might have to live with that risk. But by and large, my sense is that India is still at least some time away from that efficient market that you have in the Western world, where a majority of the funds are still not able to beat. Here in India, at least past few years have been a big issue for a lot of active managers because bulk of the money flowed in, because it's an environment of very low growth, a lot of capital lying around. So they have just flown into a set of concentrated stocks which were part of the index, big weights in the index. So if you are not having those stocks for whatever reasons, it could be corporate governance, it could be valuation concern, or you don't agree with the fundamentals. So you were supposed to take your money, you're not supposed to be invested in that. But because the flow was just coming on to the index, those kept going up. So which could change in our view, given the global interest rate environment that we're going to witness moving ahead. So broadly, I think India is still some time away from that efficient index proposition that we have in the Western world.
I'll just add. So till 3 years ago, nobody used to even suggest index funds in India. Actually, the last 3 years, suddenly there's a big question mark on active funds. So 2016, there's a foreign magazine called Morningstar, जो काफी सारे global funds को analyze करता है around the world. And they studied all the different markets, US, Europe, Asia, and they put out a report. And the title of the report was Guess which is the only country where active fund managers outperform. And the answer was India. Till 2016, India was the only market where active fund managers were consistently outperforming the benchmark. Last 5 years, things have been very, very different. So what happened in these last 5 years for active fund managers not to be able to outperform the benchmark? One big thing that happened was Reliance. Now, index rate of Reliance is upward over 10% in the benchmark. Indian authorities don't allow Reliance or SEBI mutual fund regulations don't allow to own you more than 10% of any company in your mutual fund. Since Reliance had a big rally, most of the funds did not own Reliance in that proportion. And some funds like us, because we are worried about corporate governance, did not even have any Reliance shares in the portfolio. That created a big problem of underperformance. 2020 and 21, there's another group which created a big problem called Adani. Most of the active fund managers in India don't own Adani shares in India. In fact, ownership is very, very negligible. That was a big problem. People are wondering who is buying these shares, since all the large institutions in India are not buying. But because they had such a big rally and nobody was owning them, again, that created a big underperformance for active fund managers in India. Things are reversing now, where corporate governance is again coming back in limelight, saying that perhaps these groups should not have done that well, and now they're correcting. So now, again, this year, you'll see a lot of active fund managers start outperforming indexes, including our fund. Because we don't own Adani, we had a large outperformance this year. The problem with indexing, especially in emerging markets, is precisely this. Very large groups where corporate governance is highly, highly suspect are part of the index. And when you own the index, you're owning these groups as well. And you have to live with. So Satyam was part of the Nifty when it went bankrupt or declared that they had no cash. And there are enough Satyams in the Indian indexes as well, which will come in the future. So my only argument to people who say, especially in emerging markets, so developed markets, I can understand where rules are very, very strong. They will put you in jail if you do something like corporate governance violation or something like that. In emerging markets, that is not the case. And sometimes these companies tend to stay in the index for a very long period of time. And like Satyam, and then after 10 years or 15 years, you realize there's a scam happening there. So active fund managers for some periods might give you lower returns than the index, but that is because they're not trying to take unnecessary risk in their portfolio. Once India matures, I expect indexing to be a major part of all portfolios, because once you have a very mature market, information asymmetry is not there. So what is our advantage over others? It is that we are doing a lot more research on the ground. We are doing analysis which others may not be doing, because of which we think we are able to identify good companies. As industries mature, enough information is publicly available. So that fund manager advantage disappears away. Hence, index funds then becomes very difficult to outperform an index. which is what you are seeing in the Western world. So today in the US, majority of the money goes in index funds because it is such an efficient market. Enough information is easily disseminated around to everyone. So we think there is still time away, especially for India, for that stage to reach. But it might happen, say, 15 years, 20 years down the line. After that, indexing can become a very important part of your portfolio. But till that happens, still there are issues on corporate governance with large listed companies. Till the regulations come to a level where people who do such kind of frauds are put in jail properly, I think active fund management has a very important role to play for Indian investors. At least that is our advice. But I think it can happen next 15, 20 years later. Indexing will become a very important way of investing. So the question is when to exit a mutual fund SIP or when to book profits from your mutual funds. Maybe Christy, you want to answer?
One of the signs that when to exit. So in a sense, we look at a lot of mutual funds. We try and analyze, at least in a fund of fund, when to exit. So one of the key reason for exit is, let's say, there is a change in philosophy or what they said that they want to do and what they are currently doing, be in terms of stock selection, irrational risk taking. That is, I think, one of the clear signs, that we should move. And somehow, a lot of fund houses, in a sense, like, there is no clear. What we find is the process is not very process driven. So, let's say there is a change in fund manager or the person running the thing. We have seen a bout of underperformance which comes along. So I think that is also a very important place where we should ideally look at is is anything materially changing for me to be it. So you were invested with certain things in mind, but what happens is if there is a change in stance or a personnel, so you may not realize that. Let's say you wanted to be part of a value style and it becomes a growth style, all over the place. Things like that do happen. It's not that does not happen. So I think that is one. And like also underperformance, every fund house goes through a period of underperformance, but we have to clearly recognize why are they underperforming. Is it their style is not in vogue, and is that changing? So that is very crucial to understand. So a value manager will underperform when when there is euphoria in the market. That is expected. You should be more concerned if a value manager outperforms in such an environment. So my simple case is 3 points. Is when I would probably like to book profits or move out.
Just to add, I mean, see, mutual fund SIP is like any investment. You start with your goal. What is it that you're saving for? Your retirement, your child's wedding. Some people have very short-term goals, holiday, or to fund a car purchase or whatever. It is a risky asset class, equities. So once you reach your goal, suppose you have a certain purpose in mind. You need like say 2 crores for your retirement. Once you reach your goal, you don't want to take unnecessary risk. You want to reduce the risk. Once you reach the target, why do you want to take that risk? Then you can move in that money into a fixed income product. Saying I've already reached my target, I don't know the risk. Suddenly, if like another collapse happens like Lehman Brothers, 50% of your wealth could be wiped out in 1 year. So a very simple metric of when to book profits is when you reach your goal. Once you reach your goal, take that money out, put it in a less risky product. Till that, you let it continue and let it accumulate. I think that is what I personally would do. So if I'm trying to save for something, and once I reach that corpus, I don't want to risk that money. I'll just take it out and put it in a safer product so that my target is achieved. That is how you will want to book your SIP profits, not necessarily based on target return, market levels or anything. You don't want to look at market levels and decide, because nobody knows what is going to happen in 6 months or 9 months or 12 months. People think they know, but markets can surprise you. So tomorrow there's another war which opens up somewhere, suddenly markets could tank in a big way. So it's primarily linked to your asset allocation goals. Once your asset allocation goal is achieved, that time you book your profits and put it in a safer instrument. uh, so the question is, how is the expense ratio for a particular fund decided and how is it charged to the investor? Does it affect profits of investors? Want to answer that?
So expense ratio is, so there is a TR mechanism which, the SEBI itself prescribes. So as the AUM scales up, a fund house is mandated to reduce its expense ratio. So, but to begin with, so it is in a way mandatorily set at certain scale. You will have to reduce your TER, and that happens. But by and large, typically, to run let's say the fund house, the research staff, the trading, etc. So there are certain costs associated with it. So one of the reasons why our expense ratio is 1.29 is because of the size of the fund. We are kind of close to about 1,000 crores. So that size constrains us from reducing the expense ratio. So as and when the scale kind of goes up, our expense ratios will come down. And does that impact performance? Yeah. So if you put in 100 rupees, 1.29 every year is kind of taken out as an expense ratio. So that impacts your returns. So in that sense, and if you were to think about a regular plan, it is much higher. Some of the regular plans are, upwards of 1.2% or even higher. So let's say you put in 100 rupees 1 year, so 2 rupees is just taken out in terms of expense ratio for managing the fund. So it impacts the returns that you get. And so in that sense, the lower, the better, right?
To explain simply, suppose if TR is nothing but, so to manage a fund, there is always a cost. Koi fund management team hai, there's a cost they will have to run the fund management team and their expenses of the fund. So her fund एक total expense ratio declare करता है. So let's say the a lot of funds have 2%, 2.5%, 1%. तो आप एक्चुअली आप फंड का फैक्ट शीट देखोगे तो उसमें डिक्लेयर करते हैं कि इतना एक्सपेंस रेशियो है. सो जो भी रिटर्न जनरेट होता है या जो भी कॉर्पस है, सपोज 100 rupees is a corpus and 2% is 2% is the expense ratio. That 2% they will charge through the year. So 2% divided by 365 days करेंगे and every day का expense ratio निकालते जाएंगे उसमें से. So अगर वो फंड ने सपोज नेट अगर 15% रिटर्न दिया है in that year and वो 2% आप निकाल दोगे फंड का कॉर्पस से, नेट आपके पास 13% रह जाएगा. That is a return you will get after the expense ratio. What happens is where अगर ज्यादा expense ratio रखा, very high expense ratio, तो आउट परफॉर्मेंस के लिए स्कोप नहीं बनता है. तो आप इंडेक्स का जो भी रिटर्न है प्लस एक्सपेंस रेशियो वो ऐड कीजिए. तो जस्ट टू कीप पेस विद द इंडेक्स यू विल हैव टू जनरेट दैट मच रिटर्न. तो अगर आप इंडेक्स से 15% रिटर्न दिया जो उसका बेंचमार्क है, प्लस अगर 2% एक्सपेंस रेशियो है फंड का, तो 17% रिटर्न हैज टू बी जनरेटेड just to keep pace with the benchmark. Otherwise, you will always underperform the benchmark, right? So it is always advisable to focus on the expense ratio number to ensure that it is not too high. But till a few years ago, there was a regulation around expense ratio. Then SEBI has now put very strong regulation. आपका इतना कॉर्पस है तो इससे ज्यादा आप एक्सपेंस रेशियो चार्ज नहीं कर सकते. And it is very well governed now. So expense ratio generally has come down in the industry, and SEBI, I'm pretty certain is going to keep pushing that down. So it is not as big a problem as it was few years ago where expense ratio were very, very high. It is completely up to the fund management team and their discretion how much they want to charge. So SEBI has defined the upper cap. इससे ज्यादा आप चार्ज नहीं कर सकते हो. So that is the upper side. But कितना चार्ज करना है, कितना रखना है, ये पूरा फंड मैनेजमेंट टीम के ऊपर है. And we can keep on changing it also. ये साल में 1% है, नेक्स्ट ईयर में बढ़ा के 1.5% कर सकते हैं, गिरा के 0.5 कर सकते हैं. It is completely up to them. And that is how it affects your investments. Basically, higher the fund TR ratio, net what is passed on. So आपको जो NAV number दिखता है आपका म्यूचुअल फंड का, that is after the expense ratio. तो ज्यादा expense ratio रखा तो net NAV gain कम होते जाएगा आपका over a period of time. So it's a very good question. So there's a question is, there was a point in the presentation के churn ratio low है तो better है, but there are funds right now. I will not name them. But there is a particular fund in the market right now, which has a very, very high expense ratio, but still has given great returns. So is high churn ratio really bad since this fund has done very well. Maybe Christy, you want to answer that?
So in a way, it just represents your strategy. Let's say a high churn. What does that indicate? Let's say, you're just, if you're 100% churn, you're basically moving out of a stock. You're turning around your entire portfolio in a year. So we at 20%, 14%. So we are invested in that company for 5 years. So fundamentally, what does that churn tell you? That are you really thinking like a business owner when you're investing in that particular stock? Are you staying the long game of waiting? So you have made a decision that you want you want to enter this company and ride out its growth because you see prospects changing. Now, the question is, how can that prospect of the company change within 2 months, 3 months? That is not for one company, but for your entire portfolio. So in effect, you are a big speculator when you're doing that. So nobody's taking away from the returns or anything that is being generated. It is a strategy of certain hedge management, where they do shorts, longs, whatnot in terms of derivatives. So that could be a strategy. But the simple thing is it is extremely speculative. And, there could be a cycle where you have done well. Why does trading strategies fail? Because ultimately people discover it. So then it no longer works. So, and as the AUM grows, as the strategy is better understood by the market, it gets easily discovered. So alpha is not able to be sustained. In fact, there could be big drawdowns. So my fundamental thing is, if you are a fundamental investor thinking about a business, from a capital allocation point of view, or a business owner, you should stay invested in the stock for a fairly long period of time rather than changing opinions every 3 to 5 months. So, yeah.
Yeah, I mean, see, there are many paths to nirvana. There is no one path. So some people are very good at certain skill set. And it's a very rare skill set. It's not happened in the world where people have made substantial amount of money by just blindly buying companies, or not blindly, whatever method they follow, or aggressively churning. It has never happened globally that such funds have succeeded. This particular fund has succeeded so far. It also had a lot of Adani stocks in the portfolio. They were able to exit it before the collapse happened in some of the schemes.
Adani stock, there is one question in this online question.
Yeah, I'll just answer this and then you can take that question. So what I'm saying is, again, you go back to the basics of investing. There is speculation and there is investing. I think it's a great business. I think this business next 10 years, 20 years will grow, will expand its customer base, will expand its profit base, and that is the reason I think the share price will go up. Or there is another method where I think this share price is going up by 10%. Let me buy it. If it goes by another 10%, and I will sell it. 90 or 99% of the time, the second strategy does not work. It fails. And the second strategy, see, when you're buying a fund, you have to understand the fund characteristics. When it is a small fund versus a large fund, changes quite dramatically. So if you're running a small corpus and doing that, it is fine. Once you become a 10,000 crore, 15,000 crore fund, Indian markets liquidity after the top 100 names suddenly drops. If you're trying to buy into companies and exit companies, it becomes very, very difficult at a large AUM. You don't want to buy into a scheme looking at a certain track record, and that characteristic is no longer valid once the portfolio size has changed. You cannot do that at a large AUM where you're buying and churning aggressively and selling out of companies, because you'll not get liquidity when you're trying to sell. So you have to be very, very careful. Like I said, they have delivered great returns the last 2 years, 3 years, and they're top of the ranking. So hats off to them. What has worked for them is working for them. Nobody else in the industry will do that. I'm telling you, because people have seen what happens over long term in such style. But if you're convinced about that style, you can always invest in them. There's nothing to stop it. Generally, people who have seen long cycles of investing and have seen evolution of investing advise that you're trying to do an investment and not speculation, and should not be churning investments every 1 month. Businesses don't change every 1 month, right? You're buying and then you let the business unfold. I have never seen, so you look at the top 10 richest men in the world who have made money from investing, and you look at the churn ratio, it will be one of the lowest in the world. I have never seen such aggressive churners ever make sustainable wealth. They tend to lose it over a period of time. So again, I don't have a comment on their style. It's if they think they are good at it and it's working for them, so it's great. But generally, perceived wisdom is that such high churn ratios is not advised when you're doing investing. I had a question on Adani.
Adani, what is being told is after that report, the prices came down by 85%. Electronic increased by 20%. Now they are in the projects which are very important from the national point of view. So the valuation is going to be, although prices are down. Now it is worth, whether it's worthwhile to enter now.
Yeah, so my only point to that is, see, there are two ways of building a business, right? I compete in the market. I'm competing with my competitors. I build a brand or a service enterprise where people are coming for my customer service and love it, and that is, I'm building a sustainable business. Or I'm building a business where I'm heavily dependent on government policy and I'm able to influence government policy in my favor. The second strategy can change overnight if there is a government in power suddenly which doesn't like what I'm doing, or they have their own favorites and I'm not one of their favorites. If I'm trying to build a portfolio for my retirement, I don't want to be worried about the companies in my portfolio. I don't want to wake up one day worrying, what is going to happen to this company now? Government is changed, policies are changed. They are not in the good books of this government now. I'd rather buy into a company where I know their products people will buy, irrespective of any government policy. I know that it's a great quality management. I know they're building a long-term sustainable business. And India has a long list of such companies where great management is building a very steady state, sustainable business. So why to take that unnecessary risk of having the headache? So I want to sleep well after investing. I don't want to worry tomorrow what new headlines I'm going to read, right? So again, like you said, they have great assets on the ground, great businesses. But I don't want to be dependent on a government ED raid on my competitor before I buy that business, right? I would rather have them competing in the market. So my advice to investors is, why take unnecessary risk? There are enough good companies in the market where I'm not worried about management quality of business. As long as I'm able to buy them at a good price, I will let them run and sleep well in the night, instead of worrying about what new headline is coming in the papers next. Is there anything you want?
IT sector is down. How long it would remain like?
So Christy should track the IT sector in detail, so he can answer.
IT as a sector had a phenomenal run just post COVID. There was this comment by Accenture CEO back then that we are seeing a compressed transformation cycle. That is, all the digitization that can happen in enterprise, let's say 5-year worth digitization, is just happening very quickly. And that is what we saw post COVID in terms of some of the deals that were announced by IT services. Some of the revenues, margins, everything just shot up. And subsequently, what has happened is, start of last year, there have been increasing questions. First of all, the wages have kind of really shot up, and we see all the best companies also reporting very high attrition. It's like you've never heard something like a TCS going below 20% attrition, but it went above that. So that was, and then there was this question of this whole interest rate environment impacting the global, because most of the business is export oriented. So if there is a slowdown in the Western economy, so what will happen to the IT services which are dependent on that growth? And throughout last year, we saw a big downgrade in IT. So if I remember right, it fell close to about 20. The index itself fell upwards of 20%, and that was clearly an outlier when you look at the broader index, which did okay. So so our portfolio strategy, because we are also fairly overweight on IT, post that COVID. So when those the stocks kind of started hitting our sell limits that is way back in 21, late 21. So we kind of started aggressively trimming a lot of stocks. And, so when the stocks fell, so we were, quite low in terms of our weightage. And we have been starting adding to it, the mid of last year. So what do you think going forward with the outlook of IT services is, these are businesses that no foreign enterprise can live without. They deliver staff. If let's say, given the shortage of IT talent in the global, especially US and Europe, the same work can be done at 1/3 the price sitting out of India or less. So the value proposition is extremely strong. So you might have this upgrade downgrade cycles which might have happened, and we believe that a lot of downgrade is already in the numbers. So going forward, the downgrade should at least be less. So there could be some revenue headwind that can come in the near term, but we think it's transitory. Eventually digitization is there. Every enterprise have to digitize, and if you were to think of it 2-3 years out, we think it's pretty attractive right now. So we are slightly overweight on IT compared to whatever the index you look at.
There's nothing to add. Christy is an expert in the IT sector. So I'll just take the next question. So the question is, RBI has opened T-bills to retail customers. Could you tell us about it as an investment and how to invest? So I'm not an expert in debt market. So Arvind and Pankaj, next time if we can call them, they answer. But there are two things I want to tell you about investing or trying to invest in debt market. You have to be very, very careful. So people don't understand fixed income bonds can also give negative returns. You don't realize that. They believe it is bond hai to interest aayega, and every year if it's accumulated interest, it will go up by that much. But bond prices get influenced by interest rates, including T-bills. So if interest rates go up, so suppose you have a bond which gives you 6% interest, and suddenly the market interest rate goes up to 7%. Because this bond is now giving you less interest than the market rate of interest, the value of that bond will fall. If you're holding till maturity, no problem. You will get that 6% coupon every year. But if you want to sell it in between, you will have to sell it at a lower price, because the value of that bond is a lot less. Newer bonds are giving you higher interest rates. You have to keep that in mind while investing in T-bills or any bond products. And specific to retail investment in T-bills and others. See, bond market is not a exchange-driven market like we have for equities, where I go on the exchange, buy, sell, and I see the volume. It is called an over-the-counter market. If someone, say, Quantum Mutual Fund wants to buy a set of bonds, they will call a bank, and there will be a market maker in between, and it's just driven by phone calls. They call each other and they close a deal on phones. They do it through some platform, but it is not like a transparent market like you have in the equity markets, where I see this stock is traded this much at this price or whatever. It is a very one-to-one business. So liquidity on these T-bills, when they are listed or on the platform, can be an issue. When you want to buy or sell to get a counterparty at price that you want to buy, sometimes the impact cost can be high. And bonds, typically what happens is, when they are issued, that time the liquidity is great. As time progresses, liquidity disappears, because when newer bonds are coming, liquidity in those bonds are higher. So you have to be very, very careful of these two things. One is the fact that these bonds or T-bills can give you negative returns as well, as if interest rates go up. And you may not get the liquidity that you want when you want to buy or sell these products. So if you can understand these risks and still you want to invest in a T-bill, go ahead. It's part of our asset allocation. You think that fixed income bucket, you want to have a T-bill instead of a dynamic bond fund or a liquid fund or whatever, then go ahead and invest. Anything you want to add? Yeah.
So, sovereign gold bonds,
Yeah.
you get 2.5% interest. You
Right.
hold till 8 years. The capital index is not there.
Yeah.
Whether it is worthwhile to hold for 8 years or better to invest profit.
Yeah, so Chirag was there. He's a gold fund manager. He can answer. He can go in detail. He can do a half-hour session on sovereign gold. But what is the reason these bonds were created, sovereign gold bonds? So Indians love to invest in gold. They buy a lot of gold, and we don't have any gold mines as such. Everything is imported. So the government realizes there's so much foreign currency going abroad, and gold it's not a productive asset, it's just lying there. Can we create an alternative for investors? So instead of buying physical gold, can we give them an alternative? There were gold ETFs which are already available, but gold ETFs buy physical gold. So whatever gold ETF is there, it is backed by physical gold. So even they are forced to import gold and keep it. Sovereign gold bonds do not have any physical gold backing it. It is just a government promise that I will give you gold returns plus that 2.5% interest, so that you don't buy physical gold. That was their entire pitch. If you understand the history of investing in gold, the entire thesis of investing in gold is because you don't trust the government. I don't trust the government. This paper currency, they continue to devalue all the time, continues to lose value. Let me hold some physical asset. And gold works as a currency. So people who have been under stress, the people who migrated from Pakistan to India when the partition happened, they got the gold with them because that was used as a currency to pay. Because you don't trust the government, you invest in gold. And now the government is saying you don't invest in gold, you believe my guarantee. So long-term investors who understand this problem of government interference will never invest in sovereign bond funds because they want an alternative to government as a currency. The other problem with sovereign gold bond funds is the same that you have in bond funds. Liquidity of those bond funds is not that great when you want to buy and sell. There is no counterparty available. There is no market making mechanism as such. So when you want to liquidate these bonds, it is not that easy. So hence, at least Chirag is very against investing in sovereign. So that for that incremental 2.5%, why do you want to take that risk or not having physical gold with you? Right? There are better, cleaner ways like gold ETF. In a demat form, you get physical gold available and is backed by hardcore gold. Government of India might have a forex issue, that is their problem. But I want physical gold backing my investment. I don't want to, tomorrow if the government says I don't have gold, I will reduce your return, there is nothing you can do. You are up to their mercy. But if there is physical gold available, it will track the gold price return. No other option. But our advice has been to stick to gold ETFs instead of sovereign gold bond fund. That is a better alternative. So again, this is a question for Christy. How to track the performance of a fund manager? Maybe Christy can throw some light. How to track your
So as I was saying that one of the ways that you can look at is simply what the the fund manager says and what he does. So that's a very important metric. This is a value manager ought to display value characteristic. We put a slide there showcasing the value characteristic, and that is very important because that is you being true to your philosophy. So trying to recognize that is very important. And even as I said previously, there are cycles where a fund manager can outperform or underperform the index. So we need to clearly understand what is driving that outperformance or underperformance, and then guide back to philosophy. Is that also true? So as I said, if a value manager outperforms during a bull cycle consistently, then there is something wrong. So those were some of the key things. And also expense ratio now is not a problem, but it was extremely crucial to be able to understand how much expense ratio is being charged for doing this. So earlier there used to be absolutely inordinate amount paid to in various ways. The expense ratios were very high. So for that performance was just the index. What are you getting? So that's a very crucial metric to look by. And there are certain other metrics also on which a fund is really looked at. You can look at the Sharpe ratio. The higher the better. If the standard deviation is lower, which versus the market, it tells you if there is lower risk. Also, churn is a very important metric. As I said, versus are you a speculator or investor? that can be clearly known by just looking at that churn also. So I think, and liquidity is also one of the very important factor if you were to look at. So some of the, we did exercise, just looking at some of the small and mid cap, very large funds, and they tend to own upwards of 4-5% of a company, and if some of those funds were to liquidate their holding in the company, when there is a redemption, it can take all the way from 6 months to 1 year. So liquidity becomes a very important. So that is the strategy. That is the major issue with small cap funds. You can have 1 or 2 or 3 or 4, very good small caps, stocks, but you cannot make a basket of a small cap and you have a very high UEM, because it's very difficult to liquidate, because there is no liquidity beyond top 100 stocks, by any stretch. So those are some of the characteristics that I would lay out to, really look at performance.
Just take the last question now. So what you suggest a person who's retired in this financial year? So I'm assuming someone is retiring now. So whether, I'm assuming the question is on asset allocation, what kind of asset allocation he should have. So, I mean, of course, understand equity is a risky asset class. It can be minus 52% also, plus 25, 40% or whatever. As you retire, you don't want to have that kind of risk in your portfolio, at least lower the risk in your portfolio. So your allocation to equity should start reducing as you get closer to your retirement age. But still, people have, after retirement, they have 15, 20 years of age left. They want to live. It's a very long period of time. So perhaps you want to reduce, instead of a 65%, 70% equity allocation, you want to keep it at 25, 30% allocation. Because it still generates a surplus above inflation, which other asset classes don't. But what you want to ensure is you don't want your savings to be wiped out in a year, because if there's a big market crash. So in terms of asset allocation, perhaps they should be 50, 60% debt, maybe 25, 30% equity, and then balance 15, 20% in gold and other assets. Perhaps that is a much more safer and steadier asset allocation, and not have a very high portion to equity, given the volatility of the asset class. I hope that helps. Maybe if there are no more questions, we can.
One more question.
One more question. Okay.
Now, these tax-pay bonds are for 15 years, 20 years, etc.
Yeah.
Now, when one should exit from that? I mean, whether it is worthwhile putting to the age or the exit in between.
No, which bonds you said?
Tax-pay bonds.
Tax-free bonds.
Yeah.
Yeah. Again, see, I myself have some tax-free bonds in my portfolio. The problem is, again, liquidity on the platform is not that great. If you want to try and sell what price you think you will get, suddenly you get a lot lower than that. And again, they're great yields. In between, interest rates had gone much lower and they were giving much great tax-free returns. So my advice is you can hold them to maturity. 7-8% tax-free returns is quite decent actually. It's not a problem. But in trying to sell them, I don't think government will introduce tax-free bonds in the future, given it's a very high cost item for them. Most of the HNIs decided to buy that bonds. So within your fixed income bucket, if you already have them, 7-8% tax-free is great return. Because of the lack of liquidity, if you try to sell them, you will get a much lower price than what you should get. So it's rather, if you don't need the liquidity requirement now, you'd rather hold it till maturity. And most of them are government in their own company, so there's no credit risk as such in holding. Thank you so much.
अर्थमित्र एकदा जोरदार टाळ्यांनी त्यांचं मागचे जवळजवळ 1 तासभर आपल्या सगळ्या प्रश्नांना त्यांनी उत्तरं दिलेली आहेत. ऑनलाईन क्वेश्चन सुद्धा आपले घेतलेले आहेत. थँक्यू व्हेरी मच फॉर अ ग्रेट सेशन. ह्यानंतर मी श्रीयुत विजय वझे यांना विनंती करते की त्यांनी औपचारिक आभार प्रदर्शन करावं आणि त्याच्यानंतर राष्ट्रगीताने आपल्या कार्यक्रमाचं समापन होईल.
अर्थमित्रांनो नमस्कार. आम्ही बिफोर आय स्टार्ट फॉर्मल वोट ऑफ थँक्स, मला 1-2 गोष्टी सांगायच्या आहेत. आज आपण बेसिकली हा 2 टॉपिक घेतले कारण मार्च महिना आहे, त्यामुळे टॅक्स प्लॅनिंग हे इम्पॉर्टंट आहे आणि प्रॉबेबली this might be the last year for tax planning purpose, as शेट्टी साहेबांनी सांगितलं तसं. दुसरं म्हणजे ऍसेट अलोकेशन वर आपलं व्याख्यान खूप वर्षापूर्वी झालं होतं. आणि ऍसेट अलोकेशन तुम्ही गुंतवणुकीचं कुठचंही पुस्तक उघडलं तर ऍसेट अलोकेशन किती इम्पॉर्टंट आहे हे तुम्हाला कळेल. आज जे आपण बघतोय मार्केट पडलं, हिंडनबर्गने एक रिपोर्ट दिला मार्केट पडलं, SVB झाला मार्केट पडलं. जर तुमचं ऍसेट अलोकेशन बरोबर असेल तर तुम्हाला घाबरायला नको असं मला वाटतं. यू कॅन करेक्ट मी इफ आय एम रॉंग. तर त्यामुळे हे दोन आम्ही मुद्दाम घेतलेले आहेत. असेच आम्ही वेगवेगळे विषय घेऊन दर महिन्याला येत जाऊ. आज मला सगळ्यात आनंद वाटला, जरी आज उपस्थिती इकडे कमी असली तरी ज्या तऱ्हेने प्रश्न आपल्या ऑडियन्सने विचारले, मला तर त्यांना पहिला सॅल्यूट करतो मी. कारण ज्या मॅच्युरिटीचं आणि इंटेलिजन्स दाखवलं आणि आपल्या दोन्ही वक्त्यांनी काही त्यांच्या हातात न राहता चांगली उत्तरं दिली. त्यांना वाटलं सेबीची भीती वाटली नाही असं दिसत आहे. तर त्यामुळे तुमच्या सगळ्यांचे आभार. आता फॉर्मल वोट ऑफ थँक्स करतो. आज उशीर झालेला आहे पण फंड मॅनेजर क्वांटमचे आलेले आहेत आणि फंड मॅनेजर ही खूप मोठी पोस्ट असते. तर त्यांनी त्यांच्या वेळात वेळ काढून इथे आले त्याबद्दल निलेश शेट्टी सर आणि क्रिस्टी मथाई यांचे आभार मानतो. तसेच या कार्यक्रमासाठी क्वांटम ऍसेट मॅनेजमेंट कंपनीने स्पॉन्सरशिप दिली त्याबद्दल त्यांचे आभार. तसेच नाईक वेल्थ नाईक इन्शुरन्स, वेल्थ मॅनेजर आणि दांडेकर इंटिरियर्स ज्यांनी आम्हाला वर्षासाठी स्पॉन्सरशिप दिलेली आहे त्यांचे आभार. तसेच महाराष्ट्र टाइम्स ज्यांनी आपला परफॉर्मन्स अर्थविभागाचा परफॉर्मन्स बघून माध्यम प्रायोजकत्व दिलं त्याबद्दल त्यांचे आभार. आणि राहुल मेश्राम बघा ज्यांनी आपल्याला एक टेक्निकल सपोर्ट आज सगळं रेकॉर्डिंग आणि लाईव्ह त्याबद्दल राहुल मेश्रामचे आभार. आणि सगळ्यात तुमचे आभार, कारण तुम्ही आम्हाला जर सपोर्ट नाही केलं तर आम्ही एवढ्या चौघांना कार्यक्रम करूच शकलो नसतो. त्याबद्दल तुमचे आभार. आता राष्ट्रगीत हा कार्यक्रम संपवला.